Good evening and welcome back, or should I say welcome to this session of the live virtual coaching classes conducted by the Board of Studies of the Institute of Chartered Accountants of India. It's my pleasure to be again, in connect with the students. This is the first session on corporate and economic laws, which is your paper 4. So I'll be talking about appointment and qualifications of directors. That is chapter 11 of the Companies Act as part of your of today's, shall we say, topic. And there is a query board there, which you can always raise queries on. I've already seen some names there. I'm happy to see I got people there. Mr. Vancharla, Mr. Pankaj Sharma, Mr. Mohammad Hassan. All of you welcome. Those of you who are here, nice to know that you're here. So I'm Srikanth, basically a practicing chartered accountant and a company secretary by qualification. I've been a teacher of law, especially company law, since 1992, when I started my teaching career with the Institute of Company Secretaries. So I've been combining my teaching and training with my practice as a chartered accountant, and it's been a great experience. And my experience with the live virtual coaching classes has also been good. And so more people have joined. I'm so happy. And don't hesitate to raise questions as and when you get it. Except that 2 humble requests. One, do make your questions clear. Don't make it single word or thing. Slightly make it clear so that I will understand what you're asking. 1. 2, kindly avoid raising controversial issues as a question, because I may not be able to answer it. Okay, but then if you want to share an opinion or a thought or a feedback, absolutely fine. You are welcome to give it. Even an opinion is welcome. Okay, thank you, Esan, for welcoming me. And so it's fantastic. Let's begin the topic, appointment and qualifications of directors, chapter 11. So, as you might be aware, the Companies Act 2013, which replaced the Companies Act 1956, has beautiful arrangement by which each chapter has a set of rules which are associated with it. So, each chapter has a set of rules. These rules have the same name as the chapter. So, which means this particular chapter 11 has a set of rules called the Company's Appointment and Qualifications of Directors Rules 2014. Why 2014? Because 2013 the law was passed, but it took a lot of time to get notified and all. And then finally it got properly notified only in 2014. By then the rules had come. So they were also notified only in 2014. Right? So wherever the rules are relevant, we have given the rule. I have shared the rule. I'm going to talk about it. The Board of Studies has created superb material, and I have been part of that, and I know what I'm talking about. A lot of efforts and care has been taken to make it relevant and user-friendly. So do go through the material also, and I'm trying my best to connect this with the material. Though, of course, the material may be slightly in the order in which the topic is covered may be different. Because here I will be going by a logical order, whereas there you will find the Board of Studies, in order to ensure total coverage and completion, is going by the section order. So I may not go by the section order. I will go by a logical order. Okay. 1. So there are rules associated with this. These rules also are very important. Wherever important, they are there in the Institute material and also in my PowerPoint presentation. So kindly go through. Suppose the rules are not covered in your BOS material, they are not relevant. That's the way you have to take it. The syllabus is prescribed in such a way that if it is important, it will be covered. If it is not covered, it may not be relevant. So don't bother. Okay. To the extent possible, I'm covering the rules, but some of them are, believe me, boring. So in those cases, I will be showing you the rule and saying, hey, go through the rule at all. But it may not be very relevant from the exam point of view. Otherwise, I would not skip it. If it is something very important, I will cover it. Not only I will cover it, I will jump up and down and I'll keep telling you, hey, please remember this is important, like that. I will be telling you. Okay. A quick introduction, not that you need it because you've already gone through the subject in the intermediate level. Nevertheless, mammoth legislation, 470 sections as compared to the earlier 700 odd sections. Now we've made it smaller, and the smaller version has 470 sections and 7 schedules. But the basic principles are few. Okay, so with all this, the basic principles, once you understand, then everything else will fall in place. So, as guided by my guru, Professor K.S. Anantaraman, a great teacher of law and the author of the book on lectures on company law, is unfortunately no more. He passed away in 2014. As taught by my guru, I will be covering in the lectures that follow the material in such a way that you can remember the details with ease, which means just if you listen to these lectures once, the chances are very high that you will do one more revision from the Institute book and maybe work out some practice manual and all that. You'll be well prepared for your examination. Okay, here comes, this is not part of the Institute material, this is not part of the law, but this is something so fundamental that if you understand this, your understanding of many sections will become very clear. My dear friends, whenever you study law, remember, the law will have a purpose. No law is passed by Parliament just for the fun of it. In fact, the purpose of the law would be stated in what is known as the preamble to the law. Many enactments like the Competition Act, which we are going to read, which you are going to study, I hope, in this subject, has a preamble. The Constitution has a preamble. The Constitution of India has a preamble. The Companies Act does not have a preamble, but it has 2 important purposes. Though not stated, it is important for us to know what it is. One, and I would call them the 2 pillars. The 2 pillars. What are they? Protection of the investor. Investor here, my dear friends, does not only mean shareholders. It means every person who is going to rely on information given by the company by way of financial statement, by way of forms which are uploaded in the MCACA website. So many ways the company is presenting itself to the public, based on which, tomorrow he may buy share. So tomorrow he may subscribe for a debenture. Whatever it is, he is an investor and we have to protect him. So the law, many sections in the Companies Act are meant to protect the investor, the shareholder, from possibly fraudulent directors, fraudulent management. In fact, the topic we are going to see today is exactly that. We want to bring into play a framework of good directors, good corporate management, for which many new things have been added in the law which was not there in the past. But the sum and substance of all that is protection of the investor. Ultimately, so later on when we see independent director, number of directorships, etc., please, while we will go into the micro issues of the law and the nitty-gritties and the detailing of the law, let us also keep in mind the broader purpose. So, while suppose there is an ambiguity in a section, suppose there is an apparent mistake in a section, we should not simply say the law is wrong. We should give it a meaning which would promote the purpose, which is the protection of the investor. Also, the second pillar on which the entire framework of company law is resting, these are the 2 pillars. The second pillar is the protection of the creditors, which you won't study in this topic so much as in, say, possibly winding up or compromises and arrangement or investigation. There you will find the creditors have a lot of rights, are protected, right? So this is there. So any section in the Companies Act would have some impact on one of these 2 things. Check it out. Check it out. Except possibly some purely procedural sections, which even would be supporting a section which is protecting the investor. So, for example, if you say directors should have a DIN. Now, so for the purpose of getting DIN, there are so many procedural sections. But what is the whole point of your director identification number? So that there will be a unique DIN by which we can track these buggers. So that suppose a guy becomes a director of a company, runs it very badly and runs away, then that company becomes defunct or etc. His name will be tagged so that whichever company he becomes a director, it will follow him. So this DIN becomes very important. Are you able to understand? So though the provisions related to DIN are boring, though the provisions relating to DIN are so, procedural, still the purpose is important. The purpose is to tag the director, to make him uniquely responsible. Later on, we will be seeing other sections on disqualification, where you will find 166 and all, you will find this guy, this DIN will become very relevant. How to track the disqualification? Only by tagging the DIN. So the DIN becomes very important. My dear friends, this is the essence of what I'm going to teach you. Not blindly like a school teacher, teaching the sections and giving you some inputs and all, and then mugging up and vomit. Yeah, that type of culture, okay. But that's not the way myself, my guru, and that parampara, we don't teach it that way. We teach law in the way that you will understand the purpose. Then automatically you will become an authority in this law. Later on, when you become a member of our institute, the world is going to look up to you as an authority, not only on accounting, finance, taxation, whatever, okay, also law. Believe me, we are the first source of clarity on law. Of course, my brothers and sisters in the Institute of Company Secretary are supposed to have more in-depth knowledge of this law. But you and I, as members of this institute, will be the first point of inquiry. A client or a corporate leader, MD, etc., would come to you first. And as a chartered accountant, they will expect you to be aware. In that sense, this chapter, this topic, this subject is also an important subject. Not a subject that you just mug up, vomit, get 45 or 50 pass, celebrate. You should become thorough in this subject also, which is my goal. Thanks for allowing me to give this introduction to this subject. So, a company, once it is incorporated under the Companies Act, becomes a legal entity, separate legal entity. But with all its separate legal entityship, let's not forget that it is an artificial person. It has no brain. It has no soul to be damned. Am I correct? It has no heart to feel. Then who will do all these things? How will the company act? This impersonal creation of law can only act through some agency, which obviously must be natural human being. Am I correct? Unless, just for a moment, opening up our mind and thinking of what could happen with artificial intelligence. Imagine a company becoming so connected to the internet and so becoming part of the net that it becomes an entity capable of exercising its will. I mean, that's more, shall we say, dystopian and the subject of science fiction. Let's not go there. As of today, a company is an artificial person, cannot think, cannot do. So it needs a human agency. This human agency is the board of directors. Okay. So obviously the members of a company elect their representatives, they invest the money and then they tell them, Baba, we are busy. We have invested in this company. You guys take care of the day-to-day management and run this company. So these elected representatives, who elects them? The members elect them. The members elected representatives are known as directors. So one more important legal frame point. No director will jump from heaven into the company's board. Ultimately, all directors have to be appointed or approved or ratified by the members. Without the members getting in, giving, the director cannot suddenly jump from the sky, except one or two rare categories, like, for example, the central government nominee, the creditors nominee director appointed by the financial creditors. Even there, it is contractual. And the company as an entity entered into the contract approved by the shareholders. Only on that basis, this guy is coming in. Other than that, all other directors have to be either appointed by the members or subsequently ratified by the members. Keep this in mind while studying. Of course, sometimes, I have this habit of making sweeping statements. Later on, one or two of you may cash me out. And I look forward to those students also. Those really smart guys out there and smart ladies sitting there in front of your laptop or mobile or tab or whatever it is that you use. Watch out. Hey, Shrikant, you said this. You said, what about this? This is the type of question that excites me for which I look forward to from all of you. Right. So the definition, director. So director means a director appointed to the board of a company, not by the board of a company. Director means a director appointed to the board of a company. Means who appoints him? By and large, members, shareholders, majority. But sometimes we will also see the board itself can appoint a director, etc., etc. Rare exceptions are there where they can appoint a director. We'll see all that. That will be the subject matter we are going to see either this class or the next class. Okay. Then, of course, once we see appointment, we are going to see qualifications, appointment, and obviously, if you're going to see appointment, once you see creation, the same man who creates also should teach you how to destroy. So you will see how to remove a director also. The complete subject will be covered in this chapter. So then we have the collective name for the director. So the collective term for the director is board. So board of directors. So when we say, collective terms are there. For example, when you go to Gir forest and you see a lot of 10 lions, 3 lionesses, 2 lions sleeping there and cubs and all that, the whole thing is called a pride of lions. That is a collective noun for lions. A lot of lions, you say a pride of lions. Like that, we have a board of directors. So all directors together are collectively known as board, B-O-A-R-D of directors, not B-O-R-E-D directors. They are not board directors, they are board of directors. Okay. Now, in all fairness, the definition that we read above gives no big clue as to who is a director with respect to a company. So quickly, let us look at what could be the relationship between directors and company. Basically, directors are that group of people who are responsible for the management of the day-to-day affairs of the company, running the company. Shareholders have no right to involve themselves in the management of the affairs of the company. Shareholders are the owners. Directors are the people who run the company, right? Usually, they are appointed by shareholders or other stakeholders. I'm using that word very carefully. As I told you, it could be central government, it could be creditors. Sometimes they can appoint directors. So, shareholders or other stakeholders. Sometimes board of directors can appoint a director, but such appointments are always temporary and there will be short-lived. You will see that when we come to those types of appointment, I will show you. And they always need the ultimate review by the shareholders at a future point in time. That such a director cannot hold office forever. That such a director will have to come up before the shareholders and he or she has to be reappointed by the shareholders or approved by the shareholders later. The board of directors takes policy decisions, lays down the broad framework within which the company's business will be conducted. For example, they lay down the accounting policies. It is they who are responsible for compliance with the accounting standards. It is they who have to formulate the CSR policy. All this is the board's responsibility. Of course, later on, I'll be showing you in the next chapter, that these powers of the board can be delegated, okay, by them, but to a committee, etc., etc. But basically, is the board which takes all these decisions, etc. Now, if you regard the shareholders as the heart of a company, the pumping heart, the board of directors are its brain, the thinking brain, okay, sort of. Heart in this sense, not the feeling part, but the central part. If the shareholders are the central part of the company, as the heart is the central part of a person, the brain is the thinking part of the person. So the brain thinks, right? And then it directs the hand and the legs and other organs to work. But ultimately, it's the heart which keeps it alive. The heart stops, the company stops. The heart stops, the human beings. Most of the time, that cause of death in any medical report after the postmortem, the cause of death would be only cardiac arrest. Finally, of course, some other organ would have failed, something would have, but then it's ultimately the guy dies because the heart fails. Okay, the heart stops, the guy dies. Right? Okay. Later on, you might find in my slides and when I'm talking also, I would abbreviate the term, means shorten the term or use the term BOD, which is nothing but short form for Board of Directors. So if you see BOD, kindly note that it is Board of Directors. Because, every time I can't do Board of Directors. So BOD. Okay, in the examination, you want to use short forms. Can you do that? my view is this, and I have done it as a student, I have done it successfully. I will always write the full word or full phrase once with first letters capitalized. And then within bracket, I'll put the abbreviation I'm using or which is normally accepted. Thereafter, the examiner knows that whenever he sees this abbreviation, he knows what it is. So once you have to show, hey, when I'm talking about this, this is what I mean. So you put the abbreviation within bracket. Thereafter, you are entitled to use it. This is my view. In terms of style, there's nothing wrong in it in abbreviation. So long as you give the abbreviation in full form at least once in your answer. The first time itself, you can't start off with an abbreviation, which is not a good idea. Yeah, if you don't believe me, read some of the reports written in the Hindu, Business Line, Times of India, whichever paper that you subscribe to, you'll find the reporter will use the full term once, and then they will abbreviate it, and then they will use the abbreviation throughout the report. So who is the director? Is he a trustee? Yes. In certain aspects, he is a trustee in a very limited sense. He has a fiduciary relationship. He is supposed to act in the interest of the company in the way a trustee is supposed to act in the interest of the trust. He is supposed to use the assets in the interest of the company and not for his own personal use. He must act only in the company's interest. But whereas a trustee cannot enter into a commercial relationship with the trust, trustee cannot sell to the trust, etc. A director can deal with the company. He can have a commercial relationship with the company, etc., etc. When this happens, when there are contracts in which directors are interested or related party transactions, there are certain controls. You'll be seeing that in the next chapter when we go to sections 188, 185, 186, 188, 184. All that will deal with all the subject. What happens if directors? A lot of checks and balances are put in place, but there is no prohibition. He can sell goods, he can buy goods, he can render services, etc. to the company where he is a director. Okay. So this is something, remember the directors are trustees of the company and not to the shareholders. Means they are trustees of the company and the shareholders collectively, but they are not trustees with respect to creditors or individual shareholders. Okay. There is a forum where you have to take it up. See, recently in a non-profit organization where I am a trustee, one gentleman, in another forum, he took up the issue. I told him, Baba, I am a trustee of the trust. You are a member of the organization. You are also an ex officio member in the trust. Fantastic. This question cannot be asked here. You ask it there, I will answer you. Because the correct forum is that. Right? So that way, the directors need not answer every individual shareholder. But they are responsible to the shareholders collectively, for which they have to call an AGM. At the AGM, I sit there. You come as a shareholder, ask any question, I will answer you. But simply in the morning, you cannot call my house and ask me what happened today in the company. I'm not responsible to tell you. Okay, and that will only waste my time because everybody will call. Sir, how is it doing? How is it doing? Boss, 1 year, every year, I will call you. AGM, please come. I'll give you jangri halwa. Take it. Ask me any question, I will answer at that time. That's all. Okay. Is he an agent? Yes. Some cases he looks like an agent also because the directors act on behalf of the company. And any act done by him, any contract entered into by him, binds the company. Unlike a partnership where, it's a mutual agency where one partner can bind all partners, the acts done by the director will only bind the company. It will not bind other directors, etc., etc. Okay. Got it? Again, he should be acting within his powers. If he is going ultra vires his own powers, then the company only can ratify it, etc. Because ultimately, if the company is capable of doing it, then the company can ratify it as a principle. But if the company itself is not capable, if it is ultra vires, the memorandum, you know what happens. Doctrine of ultra vires. The act is void ab initio. Okay. In which case, the company is not bound. Of course, the individual can sue the director. That is his choice. Okay, but he cannot sue the company because of the doctrine of ultra vires. More about the doctrine of ultra vires when we come to powers of directors. I will repeat. Acts done by the company which are within his powers, absolutely no problem, bind the company. Acts done by the director which is outside his power, ultra vires his power, But within the powers of the company, no problem. If they are in the interest of the company, beneficial to the company, then the company may ratify. But any act which is ultra-vires the company itself in terms of objects clause of the memorandum or any of the provisions of the memorandum or articles or the act, then not even all the members can ratify that act. This was laid down in Ashbury Rail Carriage versus Reich in the doctrine of ultra-vires. Lord MacNaughton made this point, which the idea is where the shareholder has given money for some purpose, you cannot enter into a contract for some other purpose and bind the company. The company is not bound. But of course, the individual who paid money or entered into the contract who's losing money can definitely sue the individual director because that now the director has acted beyond the company's powers, right? And so on and so forth. Right. The word officer, which is defined in section 259, it gives a list of officers, one of which is director. Okay. So he is also an officer of the company. Why we say this? Because whenever you see a penalty clause in the Companies Act, you will see the company and every officer of the company. Or the company shall be punishable with a fine of rupees 1 lakh. Every officer of the company will be punishable with a fine of rupees 50,000 or with imprisonment for 3 years. Remember, the company cannot be punished with imprisonment because it is an artificial person, whereas director is a natural person. So both fine or imprisonment, fine and imprisonment, so on and so forth. So as an officer, he is one of the persons liable for penalty or prosecution under the Companies Act. Fantastic. Nice going. Hope I'm not boring you to death with all this. Okay. Right. If you are enjoying this, and if you are at least happy with what is happening, just put up something there in the query pad just to show that I'm not talking to the zero audience. Okay. Just something to keep me going. Just something to keep me knowing that you are there. Just like, in a DJ or an RJ for an FM radio likes to get confirmation once in a while that he or she is talking to a human audience. Right? No problem. Maybe now you are not having any major doubts. Don't worry. Today we are going to cover a very important section where you will get doubts. Huge doubts are going to come. Don't worry about that. Thank you, Vancharaji. Thank you for that. Thank you for that. Beautiful. Now moving on. For the first time, the Companies Act under section 166 has explicitly laid down the duties. They have very clearly said these are the duties of directors. Okay. So let us see what these duties are quickly. From the exam point of view, how important is this? Okay, somewhat important, not very important. Not so quickly, right? What I may look at is a case study where they may give a situation where the guy has violated one of these duties and they'll be expecting you to know that this is a duty that has not been done, right? Or they may give you a multiple choice where they might say which of the following is not a duty of the director or whatever, okay? So be thorough with this. So one of the duties of the directors, subject to the provisions of this act, to act in accordance with the articles of the company. So the directors are bound to act in accordance with the articles of the company, but subject to the provisions of the act. As you all very well know, where there is a conflict between the articles and the act, the Companies Act 2013, which will prevail, the act will always prevail. If there is a dispute between the articles and the memorandum, which will prevail, the memorandum will prevail. Suppose there's the same subject on which both are talking, overlapping topic, which is rare because the memorandum is of a different type. But suppose one or two issues there is an overlap, then you should go by the memorandum and not by the articles. If there is a conflict between the memorandum and the Companies Act, the Companies Act will always be superior. So subject to the provisions of the act, he has to act in accordance with the articles because the articles contain rules and regulations on how the company should be conducted, what is to be done, etc. So the board of directors should abide by the articles. Okay. To act in good faith in order to promote the objects of the company for the benefit of its members as a whole and in the best interest of the companies, its employees, the shareholders, the community, and for the protection of environment. Wow, that is all stakeholders. It's a very, very utopian hope that this will happen. Let us pray to God sincerely that all the directors of all the companies in India will act in good faith in order to promote the objects of the company for the benefit of its members as a whole. If only they do it, we won't need SEBI, we won't need MCA also. Am I correct? Maybe we won't need audit itself. Huh? Sorry, it doesn't really happen that way. No problem. So, to exercise his duties with due and reasonable care, skill, and intelligence. Totally agreed. This is something that you can expect from a normal employee. Now, you hire a boy, you hire a guy, and you want him or her to work. So, hey, please work with due and reasonable care. So, you are totaling a column of numbers, ensure that the total is correct, things like that. Work with a good degree of skill, diligence, etc. But the director is not just any ordinary employee. He is superior. He is an officer. Okay, and also a person who is responsible for the long-term growth of the company. Therefore, he has to exercise independent judgment. Means he should not simply be an S-man. Like, you know what's happening in that joke. The MD is telling Mr. Smythe, okay, a newly recruited director, speak up, Smythe. I know you've got an opinion. I told you what it was in my email this morning. Huh? So ultimately, he has no opinion. What his boss tells him becomes his opinion. That is not exercising independent judgment, right? See, these are expectations, my dear friends. And as I told you, they are utopian. Utopian means unrealistic. Utopia is an unrealistic world, positive world, where everybody is honest, everybody is good, everybody is sincere. There is an utopian dream, we say, utopian. Okay? If you want to know more about what is utopia, do not Zootopia. Zootopia was an animation cartoon. Utopia was a name. You just go and check it out. Who created this name for the first time? In which novel? Who was the author? Nothing to do with CA. Okay, while I'm there, you're tempting me. I read a magazine called Outlook magazine, where I found that MBA students are reading humanities subjects in their college. MBA students are reading literature. MBA students, I'm not joking, they are. Why? Because suddenly they have discovered by research that those people who read literature, those people who read liberal arts, as we call them, are capable of taking creative decisions, are capable of being have better leadership qualities than those people who read only CA syllabus, who don't read any other books. Wow, what a discovery. But then, luckily for me, I discovered this when I was 8 years old, and I sort of read a lot of books and liberal thoughts. But then, it's up to you to do it or not. But suddenly, they've discovered that MBA programs now include liberal arts, including music, literature, all that. They are reading a subject. Okay. Anyway, so I didn't wait for these guys to conduct the research. I started, including it in my syllabus when I was in school. Good. Fourth duty, not to involve in a situation in which he may have a direct or indirect interest that conflicts or possibly may conflict with the interest of the company. Now, please understand, I may sell goods to the company at a profit. No problem. Nobody can, that is not a conflict. When I sell goods, provided the price that I'm charging is an arm's length price. Later on, when you come to 188, we will talk more about arm's length price, or rather I will tell you about arm's length. I think you already know what is arm's length price. The price that an informed buyer will pay to an informed seller in an open market transaction, where transparently it's happening. If I'm charging that price from the company, where is the conflict? But suppose I'm not disclosing all the facts and I'm gaining a secret profit, that is a conflict. And if I do that, I will be violating other sections and also this section. I'm violating the duty of conflict. I hope you understood the difference between arm's length price and undisclosed profit. Director should not make undisclosed profit. But if it's an arm's length transaction, absolutely no problem. What is my profit? You don't ask me. Because you can't ask that to a vendor, right? See, a vendor is submitting a quote. I also gave a quote. My quote is the same as the vendor. Because I'm a director, I'm not overruled. I can go ahead and supply. So long as I'm supplying it at the lowest bid. Because everybody gave a bid, he also gave, I also gave. My price is an arm's length price, no problem. But suppose I'm influencing the company, selling the goods to the company, and I'm charging a price that is way above the market price, then conflict of interest. Okay. And are you also able to see the investor protection here? See how all this is protecting the investor and the creditor. Not to achieve or attempt to achieve any undue gain or advantage, either to himself or to his relatives, partners or associates. In fact, conflict of interest will go beyond that. You should not do something that will affect the long-term growth. For example, you cannot set up another company which would be in competition with this company without the knowledge of the members or there are a lot of controls for that in the law. You'll see that. Also, not to achieve any undue gain or advantage, either to himself or to his relatives, partners or associates. And if such director is found guilty of making any undue gain, he shall be liable to pay an amount equal to that gain to the company. So that once that gain is paid to the company, the transaction becomes an arm's length transaction. No danger. Go on. Okay. For example, a particular land has some deficiency. It will not fetch the type of normal price like other lands. But I sell it at the going market rate. Later on, the deficiency is discovered because of which the company is unable to sell. So whatever the price at which it can sell then and the price at which it bought from the director, that difference is the undue gain. That gain he has to refund it back to the company. Okay. Now what happens? Suppose the director has done like this. Earlier, we had no section to file a suit on him. Earlier, we had no way we could catch him. Today, this section 166 gives me that power. Not to assign his office. Very important. The director is an agent. So he in turn cannot subdelegate. Delegators, non-potest delegare. Agency, principle of agency. An agent cannot in turn subdelegate the agency. He cannot create another agency. So he cannot assign his office. Means he cannot ask somebody else to act as a director while he is in the post. Okay. So assignment will be void. Okay. Any assignment of office. That is a duty that has to be done in person. You have to do it in person. You cannot send anybody else to come. For example, attending board meetings, you cannot send anybody. Okay. With one exception, which you will be seeing, alternate director. That is the only exception where a director can have somebody else representing him. Other than that, a director should do everything in person. You cannot assign. Okay. Let's identify our weaknesses and don't look at me when you list them. Okay. So, these are jokes that I have just put to make things a little more, shall we say, entertaining. Now, you will ask me a valid question. Sir, what happens if the director does not obey, sir? Correct. There should be some control. Simply give, you should not be like 10 commandments or it should not be like some upadesh given by the Guruji. Oh, you don't do like this and all. But if I do, what you'll do? Nothing. Your karma, you will go to hell. Hey, come on. Immediately some punishment should be there. Okay, some danda should be there. And that is, if a director of the company contravenes the provisions of this section, such director shall be punishable with fine, which shall not be less than 1 lakh rupees, but which may extend to 5 lakhs. Friends, this is a prosecutable liability. In addition to this, see, once he is convicted under this section, it becomes a black mark for him ever and ever. You'll be seeing later on, when we come to managerial remuneration, why conviction under Companies Act is a danger. You'll see that. When you are trying to appoint him under, that section, you'll see that. There are other duties also which are laid down in other sections. For example, filing of various documents, uploading them. Convening general meeting is a duty of the directors. Of course, these are all duties of directors collectively. And in many cases, some are duties of the MD. But they are collective. Ultimately, all directors are liable. To attend board meetings is a duty of the director. Not attending all board meetings held in a period of 12 months is a ground for vacation. Means he will vacate his office. He will no longer be a director if he does not attend all meetings of the board held in a period of 12 months. More about it when we come to vacation of office. So attend board meetings, to disclose his interest in any transaction, section 184. To approve the annual financial statements, section 134. It is his duty to sign. He can't say, I will not sign. To approve and attach the board report. To appoint first auditors. Because once the first auditor is appointed, thereafter, it is the member's job. I have to only hold the AGM, identify the auditor and show him, hey, this is the auditor, appoint him. Then the shareholders have to appoint. First auditor, no. It is the board which appoints. So that is the duty. Okay, now we move on to a little more meaty topic, with a lot of interesting possibilities for asking questions. Let's hope we get questions. Thank you for all those nice words you're putting up there. Thank you. Let's maintain the tempo and moving on. Actually, I love this subject. That's why, I like teaching it. It's a nice subject. It's very practical. It will impact on you throughout your life. In fact, your career is linked with this law. In fact, you will become the employer of an you will become an employee of an artificial person. I'm sure you're not going to join a sole proprietor, yeah? All of you are aspiring to join large companies, right? Listed companies, multinational companies. Ultimately, you're going to be an employee of this artificial person. So you are learning about that employer. You are learning about your own employer and the law that governs your employer. That is the company where you're going to join. Okay. So in that spirit, you will be more interested in understanding what the company can do, what the directors can do, etc. When you join a company, the MD is not your employer. Always remember that. The managing director is not your employer. He's your boss maybe, but not your employer. Your employer is an artificial person called the company. Remember always. The appointment letter comes to you signed by an agent of the company called the director HR or director finance. Whoever signs it for and on behalf of the company only, they sign. Okay, they are only agents, right? It's the company which is appointing you. Okay. Now, first, before we enter the topic, let us look at how many directors a company should have, minimum and maximum. I'm sure this is known to you. So quickly, minimum for a public company is 3 directors. For a private company, 2 directors. For an one-person company, minimum 1. See, OPC shareholder, 1 shareholder. But there is no restriction on directors. You can have more than 1 director also. But minimum 1 director enough. In other words, the OPC shareholder can become a director and that's it. But if he wants, he can have 1 more director also. Director is okay, but only 1 shareholder, right? Private company, 2 directors, minimum. Public company, 3. Maximum, now that is something important. Why they have put a maximum ceiling? Because somewhere in the past it was felt, many companies, they used to siphon out the funds of the company by appointing relatives as directors. So they'll have 25 directors. Each one they'll pay some 10,000, 50,000 per month as a sitting fees, blah, blah. So they said, in order to control this behavior, they said maximum number of directors, OPC, private, public, subco, 15 directors. Now, for genuine reasons, sir, I want 16 directors, 17 directors. No problem. You call the members. Pass a special resolution. No problem. If the members are okay, we have no problem. In a way, this is protecting the members. How? If the directors are exceeding the 15, they have to go to the member and tell him, Baba, we need 1 more director. Please permit to appoint 16th director or 17th director. But if it is a way of extravagance, the members can prevent it. So option is given to the members, right? So you can have more than 15 by passing a special resolution. But rarely will you need, unless you are a huge company spread over the country with a turnover of what? 3 lakh million, then, or 3,000 lakhs, then, yes, you will need a bigger board, yeah. Then you will need a bigger board, maybe 25 people, 22 people. Ratan Tata will be your board chairman, however. In those cases, you can always pass a special resolution and appoint the more than 15. Okay. Earlier, this was a stumbling block because earlier in the old law, for increasing beyond the maximum limit, you had to go to the central government and get approval. Can you imagine? Now they have said, why central government, federal government? Your own members, let them decide, pass a special resolution. Chalo. Now, a government company can have more than 15 directors. The ceiling does not apply. Indian Oil Corporation Limited, they don't bother. They can have any number of directors. They are a government company. Okay, so provided the government company has not defaulted in filing its financial statements or annual returns under 37 and 92. Friends, this condition, this precondition for government company exemption is very important. You will find it being repeated. Whenever I give an exemption for government company, remember this rider is, or this corollary is, or this proviso is compulsory. Even if I don't mention it in the slide or repeat it, you automatically add it. If you want the government company to enjoy the exemption, that company should not have defaulted in filing its financial statements and annual return under 137 and 92, both in your intermediate syllabus. Point is, the company should be a compliant company. It should have got its accounts audited and filed the annual return, financial statements, etc. within the required period. Okay. Similar exemption is available for a company incorporated for not-for-profit. So, not-for-profit companies incorporated under Section 8. Also, there is no ceiling limit on number of directors. Again, they should also be compliant. Okay. So, in future, we will use the word compliant, right? We will use the word compliant, where we will say this company should become compliant. Means the company should not have defaulted in filing its financial statements, annual returns with ROC under Section 137 and 92, right? We come to another very interesting section. Do you notice I'm not following the section order? I taught 166. Now I am talking to 165. Don't worry about that, because it's better to learn the law in logical order than in section order. This is the only deviation you will find between me and your board of studies. Okay. Not that I'm against that. They have got one logic of following the section sequence, but I prefer logical. So first we saw duty over, then minimum, now maximum. So earlier we saw minimum and maximum number of directors. The minimum and maximum number of directors vis-a-vis the company. How many directors can the company have maximum? Now we are seeing vis-a-vis the director. What is the maximum number of companies in which a person can be a director? Maximum number of companies in which a person can hold office as director. That is maximum number of directorships. Okay. The ceiling limit, total 20 companies, including alternate directorship. Later on, just hold on with me. Don't ask me what is alternate director and all. I will definitely have to tell you that. But right now, if I go there, we would face. Next session, when I'm finishing DIN, then I will go to appointment of directors by board, when I will clearly explain who is an alternate director. If you still want to know, basically I'll tell you. We saw now no director should assign his office. And I said there is an exception. If a director is leaving India for more than 3 months, during his absence, the board can appoint a person to attend the board meeting on his behalf. Director leaving India for more than 3 months, during his absence in India, the board can appoint a person, not that person, the board will appoint. The board can appoint a person to attend the board meetings as an alternate for that gentleman. So even suppose Mr. A is a director of, let us say, already a director of 20 companies. Now you want to appoint him as an alternate director for another director in your company. Will that be included? Yes. Alternate director also will be included. Earlier in the old law, alternate directorships were not taken. Yeah, for your information, not relevant, but earlier in the old law, the alternate directorships were not considered. In the new law, they are saying, hey, even an alternate directorship is a directorship, yeah. So it's a responsibility for you. Therefore, we will include that also in the 20. Okay. So this is what it is. I have covered alternate director in a very, very, very loose way. I will give more depth when we come to the relevant section. Right now, it's enough if you understand that this is a guy who's attending a company's board meeting on behalf of another director. Even such directorship will be counted for the purpose of the ceiling limit while calculating whether you have violated the ceiling limit or not. Now, this 20 is an upper ceiling limit, that is bigger limit. Within this, there is a sub-limit for directorships in public companies alone. So you can be a director only in 10 public companies. Okay? 10 public companies. So total number of companies is 20. Out of that 20, only 10 can be public company. Now, for this section alone, the word public company includes private company, which is either holding company or subsidiary company of a public company. So, public company includes a private company. So, let us say that a company is a private company. If it is a holding company of a public company or a subsidiary of a public company, it will be deemed as a public company for the purpose of this section. Now, be clear. Normally, no. Outside of this section, don't use this logic ever. Okay. But for this particular thing, a public company includes now outside of this, what happens? A company which is a subsidiary of a public company becomes a public company, right? But here, only even a private company, which is a holding company of a public company, can become a private public company. Are you able to see the difference? Either a holding company or a subsidiary company of a public company. So, ABC Private Limited is the holding company of XYZ Limited. Now, for the purpose of 165, I will include ABC Private Limited also as a public company for the ceiling of 10. Got it? Company is not to be considered for the above ceiling. Dormant company. No problem. After all, it's a dormant company. Sleeping, not active. Chhod do. Section 8 company. Oh, okay. Non-for-profit company. What can we do with that? Chhod do. But be careful. Compliant. It should have filed financial statements, etc. Remember, even if I don't tell it for Section 8 or government company, please add it as a corollary. Every time if I tell, my throat is going. Okay, remember that. Subject to the above, the members of a company may by special resolution specify any lesser number of companies in which a director of the company may act as directors. So, the company can prescribe less than 20 or 10, not more. Okay. So, the articles of the company may pass a special resolution and say, in our company, if you want to become a director, you cannot be in all more than 10 companies. You can say that. Why not? If you are Tata Motors, yeah, or if you are Reliance, or if you are Infosys, you will tell that. And if a guy wants to become a director of Infosys Limited, he will jolly well comply with it. What do you say? But you cannot say more. You can say less. You can prescribe a lesser number of companies. Okay. You can say that. Why not? Because why? See, okay. What is the purpose of this section? Think about it. Becoming a director of a company is not a joke. You need to see, at least in Europe, it's not a joke. In the US, to an extent, it is not a joke. You have to, directors really work. They take active role in the management, either in the board level or at the day-to-day level. Believe me when I say this. It's only in India that, directors come and go, do nothing, swindle funds and run away. And father company, son will automatically become MD and all that happens only in this country. There also it happens, but the son has to prove himself and come, okay, as a director, right? And including, we've got some of the great CEOs like Jack Welch and all, who sort of became CEOs from employee, okay, CEOs from employee, including we have our own Seshasai, chartered accountant, member of our institute, who joined Ashok Leyland as an assistant manager, internal audit, went on to become a director on the board and a CEO, MD of that company. He went on to become CEO or MD of Ashok Leyland Limited. So that's nothing wrong. Okay. But once you become a director, your concentration should be there on that company. So how many companies can you concentrate? So
Recording in progress.
That is, by 31/3/2015, the person should resign. Okay, he should ensure that he is not holding in more than the company's limits prescribed. Okay, he should resign from the companies which he wants to choose, and he should ensure that the number is now within the limit. Okay, and he should intimate the choices to the companies, and obviously resign, and immediate effect it will become, the minute he resigns, he's out and his number will be reduced. Okay. Obviously, if you do not comply with this section, there is a penalty. But today, this may not be relevant because we are now in 2022. Still, it's there in the section, so I am covering it. Now, if a person is in more than a specified number of companies, such person should not act as a director in more than the specified number after dispatching the resignation. Means he can't resign and still be de facto director. But how to find out is a different question. But still he's saying once you resign, you cannot act as a director. That is why I have highlighted the word act. They are talking about actually performing the role of a director. No. After the expiry of 1 year from the commencement of this act, whichever is earlier. Okay. So if you resign earlier, immediately. Or else on the expiry of 1 year, you cannot act as a director. Now, by prohibiting him from acting as a director, I am putting him in trouble because suppose he doesn't resign, but he continues to act as a director, he is violating this part. So any person accepts in more than 20 companies, then he shall be liable to a penalty, 2,000 rupees for each day after the first, during which such contravention continues, subject to a maximum of 2 lakh rupees. So keep on counting 2,000 till you reach 2,000, 2 lakh rupees. Am I correct? 100 days. Like movie, 100 days movie, 100th day, 2 lakhs, you'll have to pay. That's our limit. No problem. So these are penalties. Of course, as I'm teaching, if you have any doubts, please do feel free to ask. Now here is a question, practical problem. Wonderful. This gives me an opportunity to interact with you guys. You can actually put up something there. Go on. Examine the validity of the following. D, who is a director already in 19 companies, out of which 9 are public limited companies, accepts the directorships in the following companies. Okay. BC Private Limited, which is the holding company of a public limited company. Okay, we have started network issues. Let me check. One sec. Give me 1 minute, I'll check up. I don't see any apparent network issues. One more, while we are, this being the first ever class I'm conducting for you, I humbly request you not to bring up network issues in the query pad. Why? Because A, I cannot do anything about it. B, Institute ka gentleman is watching. Continuously, the IT person is watching. If at all there is any network problem, he will warn me by phone or whatever. Don't worry. So if no such warning has come to me, let us not worry. Welcome to India. Some network problem will come occasionally and go. So don't worry. Concentrate on what I'm teaching. Here is a problem. Why don't you give me your views? Very good. Akanksha Shivare. Sorry, I may pronounce your name wrongly because all our Indian names are so difficult. My name at least okay, Shrikant, at least you know a cricketer and all. So you people know, and you can always pronounce it Shrikant or whatever. But sorry, whatever you do. But then, so sorry about my pronunciation is wrong. Excuse me. But I would like to call you by your name. G, you are telling valid. But give me the company where it is valid. So, okay. BC Private Limited, valid. Because it will take him from 19 to 20, 9 to 10. Now the ceiling is reached. RM company, which is a dormant company, does not come within the limit at all. So, once he is appointed in BC Private Limited, the number will reach the limit, 2010. But RM company, which is a dormant company, no problem. MJ and Company Limited, Section 8 company. Don't worry about alternate director. The fact that he is an alternate director in Section 8 company doesn't matter. If he is an alternate director in a normal company, yes, it is covered. But Section 8 company not covered. Therefore, that is also not to be covered. Therefore, his appointment in BC Private Limited, RM company, MJ, sub are valid. Okay. So everything, all are valid, right? BC Private Limited also valid because with that the ceiling is reached. All three valid. Now here is see, I've just made a computation here. Okay. Yeah, later on, not today, once the complete topic is taught, all the slides have been displayed by me in the class. I will upload it in the Board of Studies portal. Then you can download it and you can keep it for your preparation. So 100% I will share the PowerPoint presentation with you. No doubt about it. But not today or tomorrow. But once this topic is completed, over the next 3 sessions, inshallah, I will take this topic. Once we complete the topic, then I will upload it. Along with some questions also, which we can answer it also in some other class if time permits. Otherwise, you can always, during the query, you can ask me. All that will happen. So don't worry. You will get the PowerPoint. Don't have to copy down notes from the PowerPoint, etc. All I want you to do is sort of just sit back, concentrate, not sit back and relax. Huh? Sit back, concentrate on what I'm telling, and look at the problems. And okay. So here, what I told you orally, I have shown you here. Okay. And remember, there is no exemption for private company under this section. Normally, private company will be included in 20. Private company which is holding or subsidiary of public company will be included for another sublimit of 10. The sublimit of 10 applicable to public company will apply to them. Here we come to another problem. Take your time. Maybe I will read it for you. Then you can. This is slightly, shall we say, more complicated. No, not complicated. Maybe that's a big word to use for a thing, but slightly, because it's got dates and all. And the dates are consciously jumbled. So first you have to see the sequence, the chronological sequence. So Mr. PMC is a director in 17 companies, out of which 9 are public companies as on 30th July 2021. So 17 companies, 9 public. See how they are all filling their public company gaps. Huh? The following companies propose to appoint Mr. PMC as a director, Mr. PMC as a director at their respective AGMs to be held on the various dates. You are required to state the consequences to Mr. PMC in accepting or not accepting in the above companies. So go by dates. So we have 25. Okay. There is another 20, then another 25 BCD Private Limited, then another 26th, then 29th. So TSP and BCD on the same day. So TSP Limited has to be included. Shall we see this? First is TSP Limited. Okay, let us see if anybody is given answers. Okay. Would you like to give answers? See what you do now, you put valid, put the company name valid, invalid like that. Or put the 1 valid, 2 not valid like that. Something to make it easy for you. So BCD Private Limited, can I appoint him? BCD Private Limited, can I appoint him? Yes. Why? Because he is only in 17 companies. Yeah. Add 1, it will still become only 18. Okay. TSB Limited, valid, 9 will become 10, no problem. So 25th story, no problem. 26th, company registered under section 8. The AGM is to be held on 26th September. Okay, no problem. City Traders Association, company registered rate. Always, if you're writing the answer in the examination, don't, I know you want to give answers. Sorry for showing the answer. Okay, I'll give you time. Still there's an answer there. Let us see. Wonderful. Shrishti Goyal, Vanacharla. Good. I like to call students by name and get connected with them during these sessions. And a lot of my old students, I have a lot of fond memories of students. I'm blind. I'm not blind like Dhritarashtra, but I'm blind because I can't see you in the way. But I can still, Imagine you. I can still, imagine your intellect, which is shining through. And the answers that you give me show me your identity and your intellect and your intellectual capability. So, Shrishti Goyal says not valid for PQR, valid for BCD, valid for City, valid for TSP. PQR is the problem. City traders, no problem. But always when you're writing the answer, if it is a Section 8 company, please don't forget to put that one line, even if it's going to be a little boring, do it. Provided the company has filed its annual return and financial statement according to Section 137(92). Okay? Or if you don't want to write section number, no problem. Provided the company has filed its financial statement and annual return correctly or in accordance with the Companies Act 2013. Just put that clause there. Okay, so you are rightly identified that PQR Limited is a problem because with the TSP Limited, I reached 18 and I reached my sub-limit for public companies, right? Now, with PQR, my upper limit is still satisfied, but the sub-limit for public company is violated. Therefore, he should not be appointed, or he should not, Mr. PMC is advised not to accept the appointment to avoid penal consequences. You know what they are. Okay. Or if he still wants PQR Limited, then let him choose one of the earlier companies, including DSP, get out and become a member here. Okay. Okay. So 2, 3, 4 valid. Correct. Pavan Bagal. PQR is not valid. Correct, sir. Mergu Kranti Ranadir has a question. I'm seeing the October 20. See, the ICAI has Board of Studies has got a website. ICAI, what is that? BOS knowledge portal is there. Just go there to final, and there you will find the material is there. The latest material is there. Just download it. So study material, you are seeing the 2021 edition will be applicable or May 23. See, boss, this is something only Board of Studies can answer. But as I'm very closely linked with them, those people there, they are dedicated people. They really work towards updating the material. And as I've also seen, I'm being very careful here, there is not much updation between October 21 and now. But there are a few. I'm sure they will. Please check the BOS website. I'm sure there is an updated edition of the material online available in soft copy. Download it. Or else just hold on. May 23 is way far away. So you can, in the meantime, I am doing my best to ensure that the material, that the slides I'm giving you are as up to date as possible. Okay. So don't get worried, Ranveer. Just aram se follow what I'm saying. Most of what I'm giving in my content, almost all of what I'm giving in my content is latest. So Board of Studies will come out with another fresh edition for May 23, which will also you will get. In the meantime, you can safely use whatever edition you have in your hand. First to memorize that. If at all there is any change, you can always unlearn it and relearn it. Bulk of it is going to be valid. So instead of saying, unless the correct Board of Studies material is given to me, I will not study. You study what is there now, and then you will find some small changes there. You can always unlearn it. Okay. In the meantime, also, as Vancharla rightly says, they publish not Corrichandam. They will give you a fresh material. Don't worry. But takes time. Till then, don't postpone your revision, Baba. Start your revision now itself. Don't say, I will do tapas till get my Board of Studies material. Board of Studies will definitely update it, do something, or else they publish the RTPs at the end, nearing the exam. Look forward to the RTP. The RTP will contain amendments, latest, up to date. I am also updating this slide. Okay, I am also doing some research. The ladies, the faculty team in the Board of Studies is doing extremely good research. So they are going to come out with the update. In the meantime, your job, Ranveer, is to listen to these lectures, follow and read. Don't worry about anything. Many people, they spend most of the time in worrying about these things that they leave the main. Don't worry about that. Okay. This section is same, no change. Read it. Okay. One more, woman director. Okay. There shall be at least one woman director on the board of the following companies. Okay. So the MCA wants more representation for women. One. So they are saying women directors should be on the board. In fact, I am a man. I mean, with due regards, I have a daughter. Okay, she's a company secretary. She was working in a company as an assistant secretary 2 years. They were reluctant to part with her, but when she got married. She's now in Coimbatore. She's a faculty teacher at the Institute of Company Secretaries, Coimbatore chapter. Very proud. I'm a proud father of a daughter. According to me, women bring a lot of common sense and expertise to the board. And having a woman director on the board is a good thing. So that's why they said, please have a woman director on the board. In fact, I always quote a beautiful Sanskrit slokam when I come to this particular slide. Okay, Ya Devi Sarvabhuteshu, Ya Devi Sarvabhuteshu, Shakti Rupena Samstita, Shakti Rupena Samstita, Namastasyai, 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 Namo Namah. That energy, which is in the form of Shakti, let us worship her. Let us treat her for what she is and give her the right opportunity to shine. And you will find that these women directors on the board are greatest assets for their companies. But then, in order to induce, a patriarchal system as prevailing in India, to do this, the MCA wants to make it compulsory. So they say statutorily, there shall be at least one woman director. But then not all companies. So they prescribed a certain type of companies which only compulsorily they should have. But my humble view, all directors should have a woman director. More than one, if I may say so, at least one. But now, I have spoken to you from my heart. Now the heart has to keep quiet. The brain has to talk. Now section says only these companies, appointment of woman director is compulsory. So which are those companies where appointment of woman director is compulsory? They are one, listed companies. So all listed companies should have at least one woman director. Two, other public companies, means unlisted public companies, if they satisfy one of these criteria, either they should have a paid up share capital of 100 crore rupees or more, paid up share capital of 100 crore rupees or more, or turnover of 300 crore rupees or more. Okay. This paid up capital and turnover, where will I get it from? As per the latest audited financial statements. So if you want to know whether your company should appoint a woman director or not, you should wait for the audited financial statements. 31st March, 22 March, I'm sure by now it should be through, September 30th over. So AGM should have been held, etc., etc. I think they postponed it, whatever. I don't know what they're doing. But the point here is, as per the latest audited financial statement, if your paid up share capital is crossed 100 crore or turnover is crossed 300 crore, you have to immediately. So the point here is, suppose I increase the paid up capital during the year before the audit is completed, I don't have to worry about it. I have to wait. Then the accounts are finalized, audit is finalized, then the audited financial statements are there. From there, if it is 100 crores, which means immediately you are liable to appoint a woman director. Okay. Now, so newly incorporated company to which this provision applies should comply within 6 months of incorporation. Because at the time of incorporation, so how can you do? So they are giving 6 months from incorporation. In case this company is formed with a paid up share capital of 100 crores. Obviously, within 6 months of incorporation, if the fellow is doing 300 crore, really great, But paid up capital, if the condition is satisfied at the time of incorporation, then within 6 months he has to comply. Intermittent vacancy. Now, some of you may want to know what is the meaning of the word intermittent. Okay, now, unfortunately, this usage, which is there in the law, is not correct English usage. Intermittent means with infrequent intervals or unpredictable, means you normally do not use the word intermittent in vacancy. I don't know why they have used it. Okay. So casual vacancy is the correct term. Means, boss, I appointed a woman director, lady resigned. What can I do? Appointed a woman director, something happened, unfortunately. She had to, whatever, something happened. What can I do? Okay. So that is a casual vacancy. Intermittent is different. For example, the correct usage of the word intermittent is Chennai had intermittent rain for the last 2 days. It's a fact. We had intermittent rains. Means there was a rain in the morning, then no rain, then rain in the afternoon, no rain, rain in the night, like that. So that is called intermittent with infrequent intervals. It's not correct, predictable, unpredictable, intermittent. It's what my understanding of the English language. Maybe I'm wrong, but there. It's okay. That is, but we are not studying English language here. We are studying law. So what they are trying to say is, during the year, if there is a sudden vacancy due to resignation, death, I don't want to say death, but then death also, lunacy, okay, like that. Okay. There is a vacancy in the post of the director. Then that should be filled up by the board of directors. See, I use the word BOD, but I said board of directors. Okay. Before the next board meeting, or 3 months from the date of vacancy, whichever is later. Later on, when we go to powers and meetings and powers of directors, you will see when the frequency with which board meeting should be held. So they are saying, hey, if the next board meeting is coming up next month, then before that you have to appoint your lady, woman director. But suppose there is no board meeting in the next 3 months, then also before the expiry of 3 months, you have to appoint whichever is later. So within 3 months is expired, still you are not held a board meeting, then next board meeting. Or board meeting has come, but 3 months not over, then on expiry of 3 months. Sorry, I made a mistake. Whichever is later. So either board meeting should be held later or 3 months should come later, right? Whichever is later. So they give you enough time to identify a person and, okay. These topics are not so difficult to digest, but what you might want to do is, you might want to remember these limits. See, as we go through this topic, you will find there are many such limits are going to come up. For example, companies which have to have a woman director, companies which have to have an independent director, companies which have to have audit committee, companies which have to have blah, blue, like that. You will find so many limits are coming. Companies which have to have a company secretary, like that. So whenever you come across this type of a limit, kindly, my suggestion, this is a suggestion to suggestion is create an Excel spreadsheet. Okay, you put, for example, particulars, then paid up capital, turnover. Sometimes they also have loans, deposits, like that. So create those columns. Then, right, woman director. Against that, you put under paid up share capital, 100 crores or more. Under turnover, 300 crores or more. Keep on accumulating this data in that Excel spreadsheet. Over my lectures. Just do it as a type of homework now. You will suddenly find you remember it better. The very act of creating the spreadsheet will help you to remember. These are techniques that I used in my work during my student days. And so that is why I'm suggesting. Now you might ask me, why don't you do it, sir? After all, you are the teacher, do it. I can do it, then I will remember it better. So the idea is that if you do it personally, you will remember it. So it's an aid for your memory. Vancharlaji is asking, in case applicable to other public companies, within how many days from the date the financial come to public notice? Sir, as usual, I'm not able to understand the question. In case applicable to other public companies, okay, within how many days from the date the financial come to? Oh, that's a good question. Now I have understood the question. That is the for other public company, not like that. Okay, you have to see, boss, you will know, yaar. Huh? You don't have to wait for that thing to be published and then don't. It's a nice question, but it's a nice question. I have no answer for it. As soon as possible is what I would say. Okay, as soon as possible is what I would say. Yeah, after all, during the finalization of accounts, you know very well what's the paid up capital. As on 31st March, board of directors should know what is the paid up share capital, right? That's a known figure on 31st March. But they're only giving you this audited financial statements. This is for the MCA. See, the MCA, how they will take action against you. So they will wait for the audited balance sheet to come out. And then once they see, immediately they'll call you, have you got a director? So don't wait till then. Okay? Immediately appoint that person. This is a practical answer I'm giving you, Baba. It's not a text. I don't have a textbook answer for your question. If 2021 other public company has satisfied the limit, but 21-22 is not applicable, shall I see the recent latest financial? Okay? I understand where you're coming from. Last year I had to appoint a woman director. I appointed her. Now this year my limit has gone below. Hello, go remove her. You have to see the latest only. Am I correct? Shall I see the recent only? Yeah, you have to see the latest. Okay. In case you get out. See, there are some sections where they say, once you get, for example, in DIS, once it becomes applicable to you, thereafter it becomes forever. Okay, like that. This is not like that. If it is 1 year, it is applicable. Other year, cannot. Is the point. Okay. So that is how it is. This is my very practical questions, Mr. Vancharla. And this is, now the students are slowly these. I love this. That's how the question. Now I know Vancharla will be asking very practical questions. Be prepared for these practical questions from Vancharla. Like that, I will be knowing. Okay. Your name is Sai, I think. Sai, Vancharla Sai. Okay. How would you like me to call you? Just put your first name or what is the name by which you are known to people. So that I wouldn't call you Vancharla if that's not your proper name. If it's your surname or family name, I do not want to keep you like that. Call you by that. Vancharla, if you like, good. That makes you a man from Andhra Pradesh, I think. If I'm wrong, correct me. Okay. So which part of Andhra Pradesh do you come from? I mean, see, in an online class like this, especially a webinar, all of us will get bored. So sometimes we keep ourselves engaged by this type of a conversation. Otherwise, you mechanically, you keep on talking subject and you guys are all brilliant. Yeah, you can listen to the subject for 6 hours, 10 hours continuously. Your focus, I don't have. But one thing, I have not told you and don't think me otherwise or that I'm trying to tell something boasting and all. I'm an all India rank holder in both inter and final, both CA and LCS. 4 times all India rank holder. No, not to boast, not to say I'm a big shot. No. Only to tell you that if this donkey can get rank, anybody can get a rank. So please take hope from that. That this fellow Srikanth and all, beautiful, West Godavari, great. So, West Godavari, wonderful. Nice. I've been to all over Andhra Pradesh, I've been most everywhere as during travels across the country. Great, sir. Mera Bharat Mahan. So, Andhra is also a great. I love them. Thank you. Welcome. So, as I was telling you, this rank bank and all, I'm telling only to tell you, if you prepare in the proper way, you can easily clear CA. But if you have wrong attitude, gone. Macro, overall picture, strategy, understanding the overall picture of the subject, understanding sections, important areas, clarity, go to the exam, write, clear, get rank. Wasting time on micro issues, okay, wasting time on issues that will never be asked in the exam, but then I think you'll be wasting a lot of time without any impact. This is a small suggestion. Stop. Now, independent director. This topic is going to take on and on and on. It's a huge topic. Okay. But hopefully we will cover it today and move on to the next topic. Okay. Independent director. Important topic. Once in a while they ask question also. 149 subsection 4. The word independent is very important. What do you mean by the word independent? Later on, you're going to see 149 subsection 6. Huge section where they are going to give you examples of where a person will be considered independent. But as a layman, understanding of independent is the man should not have any financial or pecuniary interest in the company. Pecuniary means money. Picus means in those days, picus was cattle, cow, etc. So picus are basically cow. So in those days, cow was the wealth in Rome also and in parts of Europe. So they said picus, so the word became pecuniary. And anything, so in those days, cattle was money. So pecuniary is from the root word picus, which is cattle, picus, and pecuniary, financial. So the director should not have any financial gain from the transaction or from his appointment as a director. Okay. So any person who is having any financial interest may not be considered as independent. Okay. The idea is simple. This is again an example of protection of the shareholders' interest. Think about it. If the MD of a company is planning to loot, just like our great man, okay, one great man in, Satyam, he decided to loot. Now, obviously, if my, interests are taken care of, I will support you. This is what happened in Satyam case, according to me. The so-called independent directors of Satyam, they coolly agreed to whatever this fellow Ramalinga Raju was telling. Why? Because they were not truly independent, emotionally independent, I would say. But they were financially independent. Because the concept of independent directors came even at that time from Sox. See, before Satyam, there was an international fraud. There is a so-called Enron. Where in Enron, what happened? Another famous audit company, like our friends, the PricewaterhouseCoopers, I should say, there it was another firm which you don't even know it exists now. They're so-called Arthur Andersen. As well as this Arthur Andersen, they were, sort of, one second, I'll come back. This fellow's Arthur Andersen, where the auditors were Enron. And Enron company, they did all sorts of fraud. They completely window dressed the books, did all sorts of things. Now, okay, sorry, before I continue, Saeed Aisha comes in with Hyderabad. So Telangana is also represented. Okay, Mera Bharat Mahan. Welcome, Telangana. So when I said Andhra Pradesh, I think she wanted to mention that she's from Hyderabad, which is in Telangana. Welcome. Okay. Hey, just joking. Huh? Don't take me otherwise. Okay. But what a great opportunity to interact with all of you. Thanks to technology, I'm sitting in a place called Chennai. You people are all sitting all over this country, listening. Maybe later on, you wouldn't even be connected like this. You would be just downloading and seeing the YouTube video. Okay, but whatever it is, we are all connected together as teacher and student and as Indians, right? I'm an Indian, you're an Indian. Good. So coming back to our independent directors, this Enron fellows, they did all sorts of nonsense. Now the Arthur Andersen Walas, the auditors, they were obviously not independent because they had a consulting company also, Andersen Consulting, which went on to become your Accenture. Okay, this Andersen Consulting had so much business from Enron that they couldn't, they had no independence. So they simply signed light draft and center whatever this fellow gave, and that became a big issue. And finally, Enron collapsed, and people lost their money. Then the United States government woke up, and two senators, Sarbanes and Oxley, they introduced a law in Senate, and that was called the Sarbanes-Oxley Act, by which they said directors of companies should demonstrate independence. Why I'm giving this elaborate story of Enron? Because immediately after, by the time Enron came, companies like Infosys, Satyam and all, which had taken funding from foreign funders, especially American funders, had to comply with Sarbanes-Oxley. So the so-called independent directors of Satyam were already complying with Sarbanes-Oxley, which was tougher. At that time, India, we didn't have such stringent rules for independent directors. The Companies Act 1956 was not having stringent rules. Rather, we had something called the Clause 49 of the listing agreement, which was, Kumar Mangalam Birla's work. Then Naranamurthy went on. Infosys, Naranamurthy himself went on to prescribe some more stringent rules for independent directors, which he obviously followed in Infosys and all. And we believe, our friend Ramalinga Raju also followed in Satyam. But these independent directors obviously were not independent because whatever Ramalinga Raju said, chink, they kept on putting chink. And so finally the company folded. You know the story, Satyam story and all that. Point I'm making is, once all this happened, our MCA woke up and they said, no. The new law, we will see to it that directors are truly independent. And so that every listed public company shall have at least 1/3 of the total number of directors as independent directors. The purpose of an independent director is to protect the shareholder. He will not have NC. After all, he will not gain anything. So he will be totally independent. He will be ultimate integrity man. He will tell, don't do this. And he will report to the central government. So that is the hope. And I hope that is also. Now today, I think that is happening. Independent directors are now having a lot of power. That power is coming through this section. You will be seeing later on how independent directors have a lot of power in the board. Their resignation will become a big issue. Their refusal will become a big issue. If they don't vote in favor, that motion can be defeated. So they can actually protect the interest of the investors sitting in the board. So, I mean, I'm very happy with this move, which is good, introducing independent directors into the board of directors. So every listed company shall have at least 1/3 of the total number of directors as independent directors. Okay. Now, 1/3 calculation while you're doing, see the problem with the number 3 is only odd numbers, not even all odd numbers will be divisible by 3. So whenever an odd number is not divisible by 3, even number definitely not divisible by 3, 7 not divisible by 3, 11 not divisible by 3. So whenever you have a number which is not divisible by 3, there will be a fraction. Okay? Whatever may be the fraction. You see, when you divide by 3, you will get only 2 fractions. You will either get 2 decimals. You will get either 0.3333 with a topi on top of the last 3. Okay? Or you will get 0.6666 topi. So which can be rounded off to 0.67, 0.3334, whatever you want to do. But it's an unending decimal. 33333, 66666. Whatever it is, whether it's 0.33 or 0.66, whether it's 1/3 or 2/3, you will round off as 1. So which means 4.33 will become 5. 4.66 will become 5. Got it? So any fraction contained in such 1/3 shall be rounded off as 1. Okay. Now rule 4 of the company's appointment and qualifications of directors rules has also prescribed the same. So all listed companies, 1/3 of the total number of directors should be independent. The following class or classes of companies shall have at least 2 directors as independent directors. So other than listed company, other public companies which are unlisted, public companies unlisted, having paid up share capital of 10 crore or more, turnover of 100 crore rupees or more. And now you see they have included outstanding loans, debentures and deposits, total. So you have one column saying total of outstanding loans, debentures and deposits exceeding 500 crore. I'm sorry, 50 crore. Or any one condition if you satisfy, if you are a public company, unlisted, you should have 2 directors who are independent. Listed company is 1/3. Got it? Now, Mr. Pankaj Sharma, you are asking a question in Hindi. It's not a problem for me, thoda malum, but suggestion, try to put it in English, if you can. So May 23 एग्जाम होने से पहले फुल सिलेबस कवर होगी ICA लेक्चर से, hopefully, inshallah. Who can tell anything now, sir? Don't worry, Baba. It will be covered. Yeah. So now itself, Pankaj Sharma is getting tensed. Sir, full syllabus cover होगे ICA lecture से? Inshallah, Baba. Bhagwan ke, it is in whose hands, Pankaj? We are all ordinary human beings. Okay? Inshallah. Okay? Hopefully, we will do it. Don't worry. In the meantime, you read entire full syllabus. Aap cover ho gaye na. My Hindi is very bad. Huh? If you provoke me to speak Hindi, I will spoil that language. Okay? Okay? No problem. I can understand the motivation of students like Pankaj Sharma who ask this type of questions, interrupting the class. Their, fear. Fear is the greatest enemy for the CA student. fear, doubt, keeping on asking questions. That is the greatest danger. A CA student is like, Sthita Prajna in the second chapter of the Bhagavad Gita. Sthita Prajna. He has supreme confidence in himself. He has supreme confidence in his teacher. He has supreme confidence that he can go and write. And his eyes are straight. He aims and he gets. So such a question should not come from a Sthita Prajna. Am I correct? So if you are, I want Pankaj Sharma to become Sthita Prajna. Confident. Don't worry. Aram se. We will complete it. You read it. You will become thorough and you will clear. Okay? This is a promise I'm giving you straight away. Don't worry about it. But now concentrate on the topic. Okay? Today's subject, you read today. Kal ka subject, kal. And so on and so forth. Till before the exam, we will cover it. Don't worry. Okay? Good. All the best, Pankaj. All the best. My sympathy. Don't think I'm trying to answer this question in a negative way. But at the same time, concentrate. Allow me to conduct the classes. Then only we can complete now. And in future, try to ask questions in English. Try to improve your English. What do you say? That will go a long way in making you a very successful chartered accountant. Okay, Ji? Great. Of course, I have nothing against Hindi. I would love to learn that language, speak, blah, blah. But still, humble request. Okay? Where a company ceases to fulfill any of the three conditions laid down above for 3 consecutive years, it shall not be required to comply with these provisions until such time such as it meets any of such conditions. Now, my friend Vancharla, suppose they had put a similar class in our woman director, we'll have no problem, na? They have not put such a class. That is the problem. Suppose they cease to, you ask the question, na? Very good question. For independent director, I can tell you immediately. Suppose you do not fulfill one of these conditions, or none of these conditions you fulfill 3 consecutive years, then you are out. You need not appoint independent directors till again you complain. You fall into this category. The answer is there for you in section, but for woman director, no such answer is there. Okay. No, don't take care next time. Don't take it otherwise. If you still want to ask a question in Hindi, go ahead. I love to take, because I learned the language myself. Somewhat I will try to pick up. I mean, Buddha ho gaya na, when I will learn Hindi, it's too late. But I would love to. Let us see. Now, the following classes of unlisted public companies shall not be covered under Rule 4.1, namely joint venture, wholly owned subsidiary, and a dormant company as defined under section 455. Okay. So the reason is joint venture, there will be 2 companies who have come together. Now, chances are that they would anyway be compliant with independent directors. Similar for wholly owned subsidiary, which has a holding company, which will comply. And anyway, the holding company board will also be controlling the subsidiary. Now, ultimately, the holding company's board has oversight on the subsidiary's board also. So they can do it similar. Dormant company. What is the big deal? Okay. This is part of your final syllabus. Later on, either me or some other faculty will teach you dormant company and all that. How to make a company dormant company, we will teach you. Now, where the company covered under this rule is required to appoint a higher number of independent directors due to composition of its audit committee. See, this is jumping the gun, but what to do? Later on, when you come to audit committee, I will tell you that 2/3 of the audit committee should be independent directors. Okay. Now there, I might need more independent directors. Here, I'm only asked to do 2. Okay. Then, in those cases, that higher number will become applicable. Or you might be subject to another law. Like, for example, the Banking Regulation Act or Insurance Regulation, Regulatory and Development Authority, IRDA, some other body, they have prescribed a higher number. Then such higher number will become applicable. So, again, they use the word intermittent vacancy. What means casual vacancy? Unexpected, sudden vacancy. I think that is the problem. They've heard somewhere that word intermittent rain. It's not unexpected rain. It is rain which is falling with infrequent intervals. Okay. That is what intermittent means. Okay. On and off. Intermittent actually means on and off. But whereas what they are meaning here is casual. That is sudden, unexpected vacancy. Okay. Now, any intermittent vacancy of an independent director shall be filled up by the board at not later than at the earliest. See, they use the word at the earliest, but not later than immediate next board meeting or 3 months from the date of such vacancy, whichever is later. Wish there had been a similar wording for woman director, then Mr. Vanacharla's question again would have been answered. I wish they would amend that law to include this clarity for women also. What do you say? But unfortunately not there. Here they are clearly saying at the earliest, but not later than. Okay, this one. Nice. A transition period of 1 year has been provided to companies existing on the date of commencement of the act. Okay, because the old law also prescribed independent directors and all, but it was not stringent. It was not like what it is now. Now, here is a quick practical problem. Of course, I have given the solution also. So if you want to answer it, sorry, I can't do anything. Srishti Goyal, number of minimum directors in case of public company is 3. Then minimum independent director should be 1. It is not contradictory. We will see that. We will see that. It is not contradictory. Okay? It is not contradictory. Because look at it this way. If it is a listed company, it is 1/3. If it is unlisted, 2. What you are saying is, if it is a listed company, at least 1/3 of the total number of directors. 1/3. So in your example, 3, 1. For listed company, valid. Because they don't say 3, 1/3 or 2. They're saying 1/3. So if you give this example, sir, my company is a listed company, public company with 3 directors. Agreed, which is very doubtful. A listed company will not have only 3, it will have more. Assuming that it will be 1, right? 1. Now, suppose you are saying, my company is a public company, not listed. I am having 3 directors. Then 2 of them should be independent. Are you able to understand what I'm saying? There is an answer to your question. There is no contradiction. If you are a listed company and you are having only 3 directors, which is impossible, impractical, everything. But assuming for the sake of your argument, we will take it. Then 1/3 is enough, 1 is enough. Chalo. Suppose you are unlisted company, then you got 3 directors. Now, 2 have to be independent. Only 1 will be non-independent director. That is how it should be. That is how the law will be implemented. Right? So don't find it contradictory. It is not contradictory. Correct, Shrishti? Do you agree with me? Or is my answer satisfactory to you? But take practical point. No company will have only 3. In those, if you have reached a stage where your paid up capital is 10 crore, turnover 100 crore and all, you will have more. Chalo. But assuming by going with your own argument, I will answer you. Okay? What do you say? Okay? Good. But thinking like this is a good idea, but do that after you have become really authority in law. Contradictorily thinking will not make you an authority in the law. This is not for Srishti Goyal. This is for all the students out there listening to me. Okay, I have gone on to written a book. I have written a book on company law. But before doing that, the law I understood correctly. And then only the contradictory questions will start coming. Okay. But in this type of an audience, Srishti Goyal is needed. Because sometimes, these contradictory questions will be very interesting. And sometimes, Baba, I am not God. I can be wrong. Okay, Bhagavan, only God is perfect. Okay, I can be wrong. Correct me. I will be the first man to say, sorry, I am wrong, and I will correct myself and I will go. Nothing wrong in being wrong here. Okay, except you should not be wrong for the same thing again. That is all. Once I learn, I will learn. I will never make that mistake again. But lot of 57 years, I have made so many mistakes, learned from the mistake, become good and grown, become bigger. Okay, fantastic. Thank you, Srishti, for that immediate response. Okay, no problem. But keep these questions coming. Srishti, keep these questions coming. Mancharla, keep these questions coming. That's important. Okay, Django Limited. Okay, that was when I was creating these PowerPoint presentations during the pandemic, I was binge watching a guy called I was binge watching the movies by a guy called Quentin Tarantino. So you will find a lot of Quentin Tarantino titles coming in these practical problems. So if you are also a Tarantino fan, then maybe you will connect. But otherwise, don't worry. It doesn't matter what the name is. Okay. So Django Unleashed. I think Django Unleashed. I don't know. I exactly get that name wrong. It's a movie, Quentin Tarantino. Beautiful movie. Leonardo DiCaprio and all. Beautiful movie. So Django Limited, an unlisted public company, has 5 directors. Of these, 3 are executive. Executive means those directors who are engaged in the day-to-day management. 2 are non-executive. Non-executive means those guys who are not engaged in the day-to-day management of the company. They are only involved in the board meetings. Okay. Now, friends, I know you guys are craving for a break. I will give you a break. Shall we say 8 o'clock we'll have a break? Okay. 8 sharp. Break. 10 minute ka break. Then again you come back. Go on till 9. Okay. That's my plan. Maybe this time I decided like that and I told the CH to. Next time maybe we'll have a break around 7:30 itself. Okay. 10 minutes break. Next class onwards, 7:30 we'll have a break. I do agree that you need some break. Okay. I can talk. Continue 6 hours I can talk. Okay. But you should be able to listen now. Good. So executive directors are those people who are engaged in the day-to-day management of the company. Whereas non-executive directors are not engaged in the day-to-day management. They will only attend the board meeting and they will involve themselves at the board level. Okay, very important assumption. I have not given it here. The assumption is that the non-executive directors are not independent. It's an assumption, okay, which means all the 5 directors are non-independent. See, opposite of independent director is not dependent director. It is non-independent director. Please remember that. Make a note of it somewhere. Opposite of dependence is independence. Okay. But opposite of independent director is non-independent director. Okay. Now, all the 5 guys are non-independent. The paid up share capital of Django Limited is 2 crores and its turnover is 200 crores. Okay. Both the figures are as per the latest audited financials, which is how you have to calculate the number. Okay. In all these cases, the number should be calculated from the latest audited financial statement. So both are from that. Okay. Paid up share capital 2 crores. Turnover 200 crores. So 2 crores is less than 10 crores, but turnover is more than 100 crores, right? So section independent director has to be appointed. Now, advise the company on the minimum number of independent directors if it is unlisted. If it is unlisted, no problem. You have to appoint 2 independent directors. That's all. In addition to these 5, you need to have 2 more guys, independent walas. But suppose Django Limited is a listed company, what happens? 1/3 of the board shall be independent directors. Now, these 5 are not independent. They are non-independent. Therefore, the total number of votes we should calculate out of that 1/3. So, let us assume that this is 2/3. 5 is 2/3 of the board strength. Assuming, then divide by 2/3 and multiply by 1/3, you will get 2.5. See, when you divide by 2/3, you will get the total strength. Out of that, 1/3 should be independent director. So that comes to 2.5. We already know that any fraction should be rounded off to the higher number. Therefore, 2.5 will become 3. So the total strength is 8, not 7.5. You cannot have half a director and all. Okay. So 8, out of which non-independent directors are 5 and independent directors are 3. Okay. Let me pause here to ask you if you have any doubts on this question. Okay, how I calculated, have you understood? I am assuming that all the 5 are non-independent. Therefore, the independent should be 1/3. If the independent is 1/3, this is 2/3. So divide by 2/3 total strength. Of that total strength, 1/3, 0.33 is independent. That number, 5 by 0.666 into 0.33 comes to roughly 2.5. Rounding it off to the higher number, I have 3. Total strength. Okay, give me a thumbs up if you have understood it. Thank you, Vanchala. Thank you. Moving on. Okay, we'll do one thing. This is as good a time as any for a break. So because once I start this definition, it's a huge definition. Jing, 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 it will go. And it's very complicated also. So let me pause here and announce a break. Exactly 10 minutes. Time now is 7:50. We'll have to assemble back at 8 sharp for a further discussions. Okay, Ji? Nisarg? Welcome back from the well-deserved tea break. Hope you had your cup of chai or whatever. And now we move on to possibly a very, very interesting as well as a little, shall we say, complicated section. As in, the Companies Act, you'll find a lot of these sections are coming. Like you'll find later on 188, related parties. So all sorts of interrelationship will come. You should remember all that. Bottom line, this is a definition of an independent director. Who is an independent director? So instead of giving a very descriptive, they give a very detailed definition where they will say, first of all, they'll say, who is he? They are not defining independence. They are not giving a definition. They are actually laying down the conditions when a person is independent, when he is not independent. If he is not satisfying the definition, he is not independent. So basically, an independent director in relation to a company means a director other than managing director. Later on, when you come to managerial remuneration, I will define managing director for you. As of now, take it that he is an important person in the board. He has a lot of powers, which is more than other directors. Take it that way and leave it. His liability, his appointment, etc. we'll see in that chapter, managerial remuneration. Powers of appointment of managerial personnel and etc. Remuneration. Okay. Similarly, a whole-time director. Right. Now, here they use the word whole-time director. We also saw the word executive, which I used. They are similar. See, whole-time director, executive director, meaning same. They are people who are engaged in the day-to-day management of the affairs of the company. Opposite, non-executive director, part-time director. So opposite, guy who is not engaged in the day-to-day management, he is only going to sit on the board and advise. Now, so if a person is a managing director or whole-time director, straight away he is not an independent director. So only non-executive directors can become independent directors. Got it? Also a nominee director, okay, who satisfies the following criteria, means this one. Okay, sorry. An independent director in relation to a company means a director other than a managing director, whole-time director or nominee director. So nominee director is also not an independent director. Now, who is a nominee director? A director appointed by somebody other than the shareholders. How? For example, financial institution. Suppose the loan is not repaid and there is a default. Then the financial institution will get a right to appoint a nominee director. You'll be seeing there's a section for nominee director, but basically that's how they appoint nominee directors or joint venture partners. By virtue of the articles or joint venture agreement, they will get the right to appoint a nominee director. Nominee means person who is nominated. By who? By either the central government or by creditors or by financial institution or by joint venture partner, whoever it is. Such a nominee director is not independent because he is having a vested interest now. He is representing the institution, right? Or he is representing the creditor, right? Therefore, he is not independent. Yeah? He has to obey his master. So he is not independent. Therefore, they say nominee also not independent. Similarly, you cannot take a bank nominee appointed by a financial institution and make him one of the independent directors. No. He is separate nominee director. In addition to that, you should have a independent directors. Not only should he not be, see, this is negative, other than MTWTD nominee director, and in addition to that, he should satisfy these conditions. You're going to see a lot of conditions. Now, who is the nominee director for this section? A director nominated by any financial institution or if any agreement or appointed by any government or any other person to represent its interests. So here they are restricting the definition of nominee director. Though normally the word nominee director is wide. Here they are saying nominee director means a director nominated by any financial institution in pursuance of the provisions of any law for the time being in force or of any agreement or appointed by any government or any other person to represent its interests. So financial institution may appoint or there he can be appointed in pursuance of any law or of any agreement, or he may be appointed by government or any other person to represent its interests. So, including, like I said, creditors can appoint, joint venture partner can appoint. But the idea is this nominee director will represent the interest of the creditor or somebody else. Therefore, he is not independent. So, a person who is not MD, WTD, nominee director, and who should satisfy these conditions. We will see the conditions. First, in the opinion of the board, he should be a person of integrity and possess relevant expertise and experience. Chalo, that is for the board to decide. B, he should not be a promoter. He is not a promoter or related to promoters or directors. So he should not be a promoter. Who is a promoter? A person whose name is mentioned in the prospectus as a promoter. There's no definition. Person who is mentioned in any person who is actively engaged in the formation of the company is not a director, but he's a promoter. His name is mentioned in the prospectus as a promoter at the time of forming the company. Either he is a promoter or related to the promoters or directors. So, promoter, relative of promoter or director. Means not director, relative of director. Okay. This promoter or director he can be a promoter of the holding company or of this company or of the subsidiary or associate company. Or he may be related to promoters or directors in this company or its holding company or subsidiary or associate company. Right? We shall presume that you are aware of the meaning of the word, of these words, because you studied it in definition long ago in intermediate. If you don't, just go and have a look at it. Holding subsidiary, I think you're clear. Associate company is one where this company is holding not less than 20% of the shares or voting power. That's all. Then that becomes an associate company. This is very important. This is what defines the pecuniary relationship. So an independent director is a person who has or had no pecuniary relationship. So he should not have or had any pecuniary relationship other than remuneration as such director. So, see, as a non-executive director, as a part-time director, he is entitled to some remuneration, sir. We'll be seeing that when we come to remuneration of directors. Some amount he can commission, he'll get 1%, 3%, he'll get. That is allowed. Other than that, or maybe he'll get sitting fees and all. Other than that, he cannot get anything else, not a penny more. Okay? He should not have or he should not have had any pecuniary relationship. That is thing. Or having transaction not exceeding 10% of his total income, or such amount as may be prescribed. As of now, it is 10%. Okay, 10% of his total income. Okay, or such amount as may be prescribed. Right now, it's 10%. Means the transaction with the company should not exceed 10% of the total income of the director. Okay, so he should not have any pecuniary relationship. He cannot be an employee. He cannot be a contractor. He cannot be anything except he can buy from them or sell to them. But the transaction should not exceed 10% of his total income. Or he can render some service and all. But the value of the transaction cannot exceed 10% of his total income. Not company's total income. His total income. Okay, got it? Now, this arrangement, pecuniary relationship or transaction should not be entered into or should not be had with the holding company, the company, any subsidiary or associate company, or their promoters or directors. Complete, all. So, completely he should have totally no connection. Are you able to understand how complete this is? They will do total investigation and you have to get this fellow should not have any relationship. Even with promoters or directors, no. Okay, which means you cannot put dummies here. For example, one of the directors may have an employee, a chamcha. He call, hey, you become independent then, man. Sorry, no. Because he is having a pecuniary relationship with the director. by way of salary, not allowed. Okay. So no big relationship, nothing. Should be clean, clean, clean. No relationship. Okay. The word pecuniary, as I already told you, means monetary or relating to money. Okay. Pecuniary relationship. Now, when should this be? We said as of now, in present, currently, when I'm asking this question, he should not have any pecuniary relationship or he should not have any transaction exceeding 10%. Either now or in the past, during the 2 immediately preceding financial years or during the current financial. So this transaction you should see not only for the current financial year, the year when you are appointing him as of today, but also last 2 financial years. 2 immediately preceding financial years, fellow should not have had any pecuniary relationship with any of these people, holding company, subsidiary, promoter or director of any of them. Got it? And he should not have any transaction. Of course, up to 10% chalta hai. They say, hey, go on. 10% is not a big deal. Enjoy. Means, boss, you're a director, you are there. He's a textile company, you are buying some Raymonds, you are buying some suiting material. Chalo, no problem. So long as the amount does not exceed 10% of your total income. Of course, you're going to see a bigger exemption, which is the MCA in 2014 said, in case a transaction entered into by an independent director with the company is at par with any member of the general public, that is, it's an arm's length transaction, then it is allowed. There is no limit. Are you able to understand? There is any transaction which is entered into between the company and the independent director at arm's length, as at par with any member of the general public and at the same price as payable paid by such member of it. So here we are talking about sale, because they use the word at the same price as is payable or paid by such member of public. So the only type of transaction we are looking at here is sale. There is a company selling goods or services to that person. Even if it exceeds 10%, no problem, provided the transaction is happening at arm's length. That is at the same price as payable by or paid by such member of public. Because similar exemption is available in 188 for even executive directors, for even normal directors. So that is why they are giving similar exemption. Okay. Any receipt of remuneration from one or more companies by way of fee, the sitting fees, reimbursement of expenses of participation in the board and other meetings, profit-related commission. So these 3 are not covered. We already saw that. Other than as director. So he can get by way of sitting fees or reimbursement of expense for participation in the board meetings and any profit-related commission in accordance with Companies Act. I already told you, when we come to the next chapter, I will tell you managerial remuneration, I will tell you about it. Okay. Similarly, section will not apply to a government company. If it is not committed to default, blah, 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 blah. I will not repeat. Okay. Same thing. Okay. Good. Friends, are you feeling bored? Okay. If you are not feeling bored and you're still awake, give me a thumbs up. Some questions are coming from Manachala. Total income means is not remuneration. Total income means as per income tax return last year. Total income, not only remuneration. Means and include not related to promoter. See, he should not be a relator. Relate means and include not related to. See, relative. See, there's a definition of relative. Later on, I'll cover it. Right now, I'm not able to cover it. In some other topic, I will cover the word relative. The word relative is defined in the Companies Act. So, as per that provision, he should not be a relative of the promoter. Okay. Okay, Vancharla always puts OKA. Many students put OKK. That seems to be the latest style. Many students will put OKK, sir, like that. So that's, I believe it's okay. So what is OKA? I don't know. It's a new abbreviation for me. Okay. Can a person become independent director more than Mukta ji? That will be answered after this in a short while. No, but don't jump the gun. I will give the answer. Once I finish this, I will give that answer. Okay. Now, we saw 149.6C. Now we are seeing D. None of those relatives is holding any security of or interest during the two immediately preceding financial years or during the current financial year of or in its holding company or this company or subsidiary or associate. So relative should not hold any security, right? Friends, he cannot have any pecuniary relationship, including owning shares, right? Relative also cannot hold. That's what this means. Any security is a bigger term. Shares are part of security. Definition as per the Securities Contract Regulation Act. Preference shares, debentures, you name it. He should not be holding any security. ESOP, nothing. Okay. Because ESOP, if he's an employee, he can. Anyway, nothing. Okay. Who? The relative. But here they give a relaxation. They say the relative may hold security or interest in the company of face value not exceeding 50 lakh rupees or 2% of the paid up capital of the company or such higher sum as may be prescribed. So for up to 50 lakhs, because you see, relatives is all too much. If relative may buy and also they say up to 50 lakh, no problem, boss. Or 2% of the paid up capital, if it is more, no problem. Such higher sum. Okay. Value not exceeding 50 lakhs or 2%, whichever is higher. So you can hold. Above that, a relative should not hold in either the holding company or the company or subsidiary. See, try to remember these limits, because in the exam, these are all beautiful practical questions to ask you. They will say, Mr. So-and-so is proposed to be appointed as the independent director. His brother, incidentally, brother is relative, is holding security, is holding shares in Manaran Company Limited, whatever, that company which is going to appoint him. And they will give you an amount. So if it is not exceeding 50 lakhs, he is allowed. Or if it's not exceeding 2%, allowed. Okay. So that they will be testing your knowledge of this. Similarly, see here we are talking about holding shares. Now we go to debt. So none of whose relatives is indebted for an amount in excess of 50 lakh rupees or has given a guarantee or provided any security in connection with the indebtedness of any third person. Means the relative has not borrowed, but somebody else has borrowed for which the relative has given a guarantee to the company or its holding company or subsidiary or associate or promoter or director. See, why here promoter or director is not there? Because here we are talking about security being held. Now, obviously, you cannot hold security in a promoter. Yeah. Therefore, they're not. Whereas here, even a promoter or director could lend money. So, man should not be indebted to anybody, promoter or director. Here again, they give a limit of up to say 50 lakh rupees. Again, this limit should be seen during the two immediately preceding financial years or during the current financial. So, on the date I am asking him, at that time, he should not be a shareholder or indebted up to 50 lakh, shareholding up to 2% or 50 lakhs, whichever is more, either now or during the two immediately preceding financial years. Okay. D. Now, we've seen relative holding share, relative being indebted, relative giving a guarantee in connection with the indebtedness of any other person. Good. Now, sorry, this should be E. I don't know. D. No, this is D, 2, then 3, now 4. So we are seeing D only. D1, D2, D3, D4 now. So 149, 6, D, 1, 2, 3, 4. That is italics 4. Now, you might want to ask me, immediately some people will get this problem. Should we remember all these nonsense section numbers are like that? Okay. Your choice. If you don't remember, at least remember the main section number, 149. If you can remember the subsection, that will be great. You don't have to be so accurate. Okay. No. If you write 149.6 itself, they'll be so happy. They'll be more than happy that you know 149 subsection 6, because after that, it's all limit like this. Okay. Ms. Saeed Aisha, Mr. Saeed Aisha is giving me a thumbs up. Thank you, madam. Okay. And Joglekar. Mukta Sadanand Joklek. Good. Okay. Wonderful. Now we come to D4. None of whose relatives has any other pecuniary transaction or relationship amounting to 2% or more of its gross turnover means holding company ka gross turnover or the company ka gross turnover or subsidiary or associate ka gross turnover. Okay. So that value of the transaction, the pecuniary transaction can go up to 2%. Beyond that, it cannot go. I mean, up to 1.99, 2 or more of its gross turnover or total income, then whether they are taking it singly or together, then the director will become non-independent director. Please understand, nothing happens relative. But if the relatives are having pecuniary transaction, 2% or more, either, for example, wife and son, son and daughter, whatever combination, total exceeds 2%, then of the gross turnover or total income, then the director will become non-independent. In all these cases, D point, if the relatives do something, the director becomes non-independent. Remember that. Nothing happens to the director himself. E, that man, that fellow who is going to be appointed, the proposed appointee by himself or any of his relatives, if he is holding or has held the position of a KMP, or has been employee in any of the 3 financial years immediately preceding the financial year in which he is proposed to be appointed. So either he or his relatives should not currently hold KMP position. KMP definition is also studied by you. Basically, it's all these guys, yeah, director, MD, full-time director, secretary, company secretary, CFO, all these fellows are key managerial person. Okay, so whether neither himself nor any of his relatives holds or has held the position of a KMP or is or has been employee, merely employee, not KMP, in any of 3 financial years immediately preceding the financial year in which he is proposed to, either in the company, holding company, or subsidiary or associate company. Okay. In case of a relative who is an employee, the restriction under this clause shall not apply for his employment during preceding 3 financial years. Okay. So this applies only to that person. In case of a relative who is an employee, the restriction shall not apply for his employment during preceding 3 financial years. Okay. Now, the idea is that KMP, especially KMP, for example, Mr. A is going to be appointed as an independent director of a company. His wife is the secretary of that company, or his wife is the company secretary of the subsidiary. Sorry, she has held the office of KMP. Then, no, she is not. Holds or has held. So, he also cannot be. So, employee cannot be appointed, KMP cannot be appointed. Neither himself or any of his relatives is or has been an employee or proprietor or partner of a firm of auditors of a company, secretaries in practice, cost auditors, any legal or consulting firm, where the transaction between these people and the company amounts to 10% or more of the gross turnover of such firm. So he is an employee or proprietor or partner of a firm of auditors. How a person can be a proprietor of a firm, God only knows. See, since Muktaji is into contrary questions, here I am asking you a contrary question. How a proprietor can be in a firm? Okay, we will excuse them and say they mean a proprietary firm, whatever that means. So he is a proprietor, sole proprietor or partner of a firm of auditors or secretaries or in practice or company secretaries or cost auditors or legal or consulting firm. The transaction between this firm and the company should be 10% or more of the gross turnover of the firm. Of that firm, remember, of that firm, in any of the 3 financial years immediately preceding the financial year, which means you cannot appoint an employee or partner of your audit firm. So idea is, sir, you resign as auditor of that firm. This year you sign the balance sheet. Do whatever I ask you to do. Next year you come, I will make you independent director. Not allowed. Not allowed. Sir, you are the auditor of the company. You are also a big auditor. you please become an independent director. Sorry. If you want to become independent director, resign as an auditor. If you want to be auditor, keep quiet, don't become independent director. Okay, only one choice. Okay, good. I think these are all fairly simple, but a little bit product. Yeah, you can write that as per the sole proprietor of sole proprietary firm, whatever. Anyway, since Mukta was asking contradictory question, I can also ask contrary question. Yeah. Doesn't matter. See, the fellows will simply draft sections. They don't know anything. Simply they will draft a section and go and trust on God that it should be correct. Sorry, you are going to see even worse drafting as we go into the law. You'll be seeing even worse drafting, even worse grammar, even worse drafting you will see as we go into the law. And it's my unfortunate duty to teach you this law. But the earlier 56 Act was superb. See, 13 Act is also great. But for these obvious logical errors and grammatical errors, the intentions are honorable. The intentions of this law are honorable. But the words of the law are so bad. The person who obviously was more of a vernacular speaker of this language. They did not have facility over the language. That is obvious. So possibly this was all drafted in another language, the vernacular, and then translated into English. That is the unfortunate conclusion I have to derive after a close reading of this enactment. Okay. Now, so at last we are coming to an end to this torture. Let's see. Neither himself nor any of his relatives holds together with his relatives 2% or more of the total voting power of the company. So here they are not talking about shares. Here they are saying total voting power. Either himself or with his relatives he is holding. Right? Or neither himself or any of his relatives. Always read it at the top. Then only it becomes sense. Neither himself or any of his relatives is a chief executive or director by whatever name called of any non-profit organization that receives 20% or more of its receipts from the company, any of its promoters, directors, or its holding subsidiary associate, or that holds 2% or more of the total voting power of the company. See, the MD of that company is a great devotee of some Babaji. Okay. That Babaji is having an ashram, is doing great service, is cleaning up the Ganga, whatever he is doing, some great things he is doing. No problem. Okay. As part of the company CSR, we have given them Ganesha to that non-profit organization. The Babaji is the chief executive. Okay. Sannyasi is the chief executive. Or, okay, they won't call him chief executive, principal, some principal coach or principal, some preceptor, some nonsense. They'll say, whatever he is. If that entity, non-profit organization, it could be a Section 8 company, it could be a trust, it could be anything. If it has received 25% or more of its receipts from this company, or from any promoter or director or holding or subsidiary or other company, or if it holds 2%, then gone. Babaji cannot be appointed as independent director. Though he is a sannyasi, though he is so great, the halo is behind his head. Sorry, you are financially dependent on me because you are receiving 25% of my receipts. So Babaji top notch is in my hand. Babaji, what do you think? Shall we do fraud? Yeah, please go on, do. What is that? Why? Because he is getting 25%. Yeah. This is the problem with this whole thing. That is why they have so stringently prescribed independence. So if Babaji wants to be an independent director, stop taking money from this company. Okay? That is why. I mean, sometimes I will be talking very casually, but then I hope you got the message I'm communicating here. They want to be pure, like the independent director should go through an Agni Pariksha. Like Sita ji was forced by Ram to do it. Agni Pariksha. Complete, no relationship, no financial association. So only then pure as pure, only then you can become an independent director. Who possesses such other qualifications as may be prescribed? It's too much. Yeah. In addition to all these negatives, fellow should also be qualified. What qualification? We will see. Okay. So, and he can also possess appropriate skills. Okay, like so many fields are there, law, management, sales, marketing. So this is almost covering everybody. Anybody can come under one of these sets. For example, a BCom graduate who became a pharma representative, went on to become something, he'll be an expert in sales marketing. Yeah. So that's not a problem. So agreed. We can tell that he is qualified. No problem. Okay. But in addition to that, this guy also has to qualify an examination. He has to become a member of the institute. We'll come to that quickly. Every independent director shall give a declaration that he meets the criteria of independence at the first meeting when he participates as a director. So he has to give a declaration. He has to read 149.6 fully, accept that I have not covered. I am independent. And he has to give a declaration. He should do it at the first meeting of the board in which he participates as a director. Thereafter, at the first meeting of the board in every financial year, or whenever there is any change in the circumstances which may affect his status as an independent director. This answers a very beautiful question that Vancharla was asking. See, suppose in the middle something happens, immediately he has to inform. Whenever there is any change, or every year, every financial year, he should reconfirm, I am pure, I am pure, I am pure. But suppose anything happens by which there is any change and he is covered by 149.6, he has to inform. Okay. Now, thank you, Muktaji, for telling us, sir. Thank you. Okay. They have also prescribed a code for independent directors. Odd code, yeah. Already 149.6 is more than enough. Auditor also is supposed to be independent. You remember? There are qualifications of auditors, which is studied in intermediate, similar to independent director. A lot of similarities with that. We are also supposed to be financially independent, except for the fee, we should not get anything else from that company. 144, all that stuff is there for us. For protecting our independence and our purity, the law has prescribed such restrictions. See, William Shakespeare said, unto thine own self be true, and it shall follow as the night the day. So that was the test of integrity for Polonius to his son Laertes. To thine own self be true. The famous poet from Tamil Nadu, Thiruvalluvar, he says, Manathirkan Masila Nadal. Manathirkan Masila Nadal Anaitharan Agula Nirapira. Similar, if I translate it, it will be Shakespeare. Unto thine own self be true. Everything else is unnecessary. Manathirkan Masila Nadal Agula Nirapira. So that is, unto thine own self be true. Everything else is transient, not relevant. That's what Thiruvalluvar says. But then, that type of Manathirkan Masala Nadal or unto thine own self be true is not acceptable to the Companies Act. So there they have very clearly prescribed. In addition to that, they give some code also. You don't have to remember the code, just to know that the code is prescribed in Schedule 4 of the Companies Act. Okay, you can always read it later when you want to become an independent director. Please do read it. As of today, as a student, just know that the code of conduct for an independent director is kept in Schedule 4. Okay, guidelines, role and function, duties, etc., etc., etc. Go through it. Not necessary for exam. Very important part. Very important. See, as we are going through the sections of the Companies Act, you will find there are many penalties and punishments. Now, notwithstanding anything contained in this act, meaning Companies Act, an independent director and a non-executive director not being a promoter or key managerial personnel. So two guys are covered here, both independent director and a non-executive director, but he should not be a promoter or KMP. Okay, he should not be a KMP or promoter. Other than KMP, promoter, non-executive director and an independent director shall be held liable only in respect of such acts of omission or commission by a company which had occurred with his knowledge, attributable through board processes, and with his consent or connivance, or where he had not acted diligently. Okay, so there's a great exemption. For example, Mr. So-and-so may be, Mr. X may be an engineer. He's got a lot of engineering knowledge, but absolutely no company law knowledge, finance knowledge. So the guy becomes an independent director. He sits on the board. He is not on the audit committee. He only attends the board meeting. In the board meeting, he reads the board papers, gives them some advice on technology, strategy and all that. They are happy. But in the meantime, that company has evaded GST. The company has violated Companies Act and all. Now, he will not be liable for the Companies Act offenses. Are you able to understand? Because he'll always say, boss, I am aware, I was on the board, but I am not aware that they were violating company law. Yeah? So long as he says that it occurred without his knowledge. But suppose the same guy is a chartered accountant and he's sitting in the audit committee. Okay, now he cannot say I'm not aware and all, because audit committee is supposed to review all this. And how it can happen without your knowledge. Yeah? Then it has happened with your consent only. You knew about it. or maybe you did not ask certain questions that you should have asked. Therefore, that person cannot claim exemption. Whereas a guy who is not in any of these committees, who can genuinely say, I'm not. That is why they say attributable through board processes. Some information would have come to you through the board, yeah. When you sat in the board, you ignore it, then sorry. But if you are not aware at all, it has been concealed from you, no problem. You are independent, please go. So the office of the independent director shall be for a period of up to 5 consecutive years, continuous 5 years. But he can be reappointed on passing of a special resolution, okay, for another 5 years. Right. Now somebody was asking a question, which is, no independent director shall hold office for more than 2 consecutive years. Okay, so 5, 10, total 2 consecutive years. Once he is appointed in one company and he has completed 2 consecutive terms, then he cannot be an independent director for that company for another 3 years. He can be reappointed only after the expiration of 3 years of ceasing to become an independent director. Okay. He should not also be appointed or associated with the company in any other capacity during the said period of 3 years. Nothing. You should be out. Okay. See, very important. What I have put it in that small blue rectangle, you will have to relate it when we come to 152 later. That is the provisions of the section 152, 6 and 7 pertaining to retirement of directors by rotation. Kya hai ab? I will tell you later. When you come to retirement of rotation, I'll tell you. But at that time, when we see the exemptions to whom this section does not apply, remember, under 149.13, it does not apply to independent directors. Okay? Now, non-profit organization, newly added provision. Also requesting if you can please highlight new added. No. It's not a newly added provision, sir. Non-profit organization, I'm using that word. Basically, it's a section 8. It's a section 8. Yeah. Is this a cooling period of 3 years? Yes, sir. The independent director cannot be appointed for a period of 3 years. Okay? Same. This is a cooling period for 3 years. Maybe the wording is a little confusing. I'm sorry, but I'm using the section ka wording. As you rightly say, it's a cooling period for 3 years. If that is clear to you, I'm happy. Okay? That is, once he is completed his term, 2 consecutive terms, he cannot be reappointed for another period of 3 years. So 3 years of cooling. So independent directors, though we say they are totally independent, still, we already saw, they can get their normal remuneration by way of fee, sitting fees, also reimbursement of expenses, etc., profit-related commission, see, which is prescribed in the Act. We already saw this. I'm just putting it here. But he is not entitled to stock option. So no stock options, no sweat equity, nothing for independent directors. If a company has no profits or its profits are inadequate, an independent director may receive remuneration exclusive of any fees, etc., in accordance with Schedule 5. Means, if there are no profits also, later on, when you come to section 197, I will teach you, I will show you that independent directors are also entitled to some remuneration based on the effective capital. Okay, so that is there. Right, sir? So this was inserted in 2020. It became applicable for November 21 exam. Now it's definitely applicable, don't worry. See, because it was an amendment at that time, I highlighted it. I think it's now too much of an highlighting. I will just remove this. Because no need to be so excited about it. At the time when I conducted the classes, this was very relevant. So I made a big thing out of it. Okay. Provisions relating to appointment of independent directors, etc., shall not apply to a not-for-profit company. Sir, not-for-profit company is not a new concept. When I say not-for-profit company, I mean not-for-profit company, Section 8 company. Okay. Not-for-profit organization, you know that a trust, that's all, nothing new. I don't see anything new. And so, Mr. Kumar, thank you for your nice compliment. But it's not very new. I don't see it as new. You can please highlight. Definitely, boss, Right now, I'm going to show you one amendment. Okay. Right now, I'm going to show you one new amendment when I come to here. Okay. So we are still not done with independent directors. We still have something to go. We are not escaping. Independent directors is one of the most boring topic. In fact, those of you who have listened to me now, okay, please, you do one more revision tomorrow. Be thorough. Okay. As and when I teach you a topic, read it immediately. See how much it is becoming in your memory. Or else, of course, if you want to do some second revision, before you do that, listen to my lecture on the YouTube and then go on. Quickly fast forward all the nonsense that I keep talking occasionally and just come to the content part, listen to it and go back. Okay. So, okay. How do I select these independent directors, sir? These so-called divine beings who are so great. Where will I find them? Okay. For this purpose, our Minister of Corporate Affairs has created a data bank. So that data bank will contain names, addresses, etc. of people. That data bank will be maintained either by the central government or by an institute or body notified by the central government. And it will be put on the website. But putting the person's name on the website is not a guarantee. The responsibility of exercising due diligence before selecting a person from the data bank referred to above shall lie with the company making such appointment. Sir, nobody can get a certificate for lifetime integrity. Man may be having integrity today. Tomorrow he may not be. So as a date when I put up his name, I found him to be of integrity and honesty. Today, God only knows. You verify yourself and then take him. But one thing we can say is that his fellow has got some experience, knowledge. Fellow can be taken. That's all. Okay. The central government may prescribe the manner and procedure of selection of independent directors who fulfill. No, they have prescribed that. Very important. Rule 6. Okay. Rule 6 of the rules, which has been amended in this recently. So every person who wants to become an independent director should apply. Okay. He should make an application. Okay. Within 3 months from the commencement of the act, or in today, the act has been commended. So you just have to make an application to the body, to the institute. Okay. That institute, he should apply for inclusion of his name. Okay. Now, any individual, including an individual not having DIN, may voluntarily apply to the institution for including his name. See, for inclusion of your name, there is a form. You have to download that form and or fill it up online and submit it. They will ask you all sorts of very troublesome questions. What is your experience? Where you are working? What were you doing? What is your knowledge, experience, etc., etc. They will keep asking you. Once you upload it, they will put it there. Okay. Now, so once your name has been included in the data bank, then he should file an application for renewal for a further period of 1 year or 5 years or for his lifetime within a period of 30 days from the expiry of the period up to which his name was applied for inclusion. So you apply for inclusion, your name is included. Then before the expiry of that, you should make an application for further period of 1 year, 5 year or 30 days or lifetime. Okay. In case the individual was applied for inclusion in the data bank, failing which the name of such individual shall stand removed from the data bank. Now no application for renewal shall be filed by an individual who has paid lifetime fees for inclusion of his name in the data bank. Wow, what brilliance. Who drafted this point? I don't know. Plus, lifetime means lifetime, yeah. Obviously, if the fellow has paid you a lifetime fee, you can't remove his name, man. And there's no need for any renewal application at all. Okay. Anyway, fantastic. What beautiful logic. Anyway, it's okay. So, if you have applied for inclusion for 1 year, before expiry of 1 year, you have to reapply, renew. 5 years, before expiry of 5 years, you have to renew. Within a period of 30 days from the date of expiry. Lifetime, how can you apply before lifetime? How do you know when you will die? So obviously, in the case of an individual who has applied for lifetime, no need for any renewal. Okay. Now, every year that fellow should file a declaration of compliance with empanelment in the data bank to the board. So he should ensure that he is in the board. He is in the data bank. And every year he should give to the board of directors of every company where he is an independent director, should inform them that he is eligible, he is in the data bank. Oh, every individual whose name is included in the data bank shall pass an online proficiency test. It's a self-assessment test conducted by the institute. He should qualify that within 1 year from the date of inclusion of his name in the data bank. Got it? So within 1 year, his name will be included, but then within 1 year, he has to pass that online proficiency test. Not a difficult test. Failing which, his name shall stand removed from the data bank of the institute. Because we've always been mentioning institute. Which institute is this? Not the Institute of Chartered Accountants of India. It is the Institute of Indian Institute of Corporate Affairs, IICA, at a place called Manesar. I think Manesar is in what? Haryana? I don't know. NCR? Not seriously aware. Anybody from NCR region can tell me. Manesar comes under, I think it's somewhere near Gurgaon, but then Gurgaon itself doesn't come under Delhi, right? I don't know. Yeah, not very clear. Manesar. But I know Manesar is beyond, near Gurgaon. That I know. But is it part of NCR or is it National Capital Region or is it part of the, I think it will move on to what? Haryana, then Rajasthan, right? Haryana. I don't know. Okay. Pawan's enjoying the joke as much as I did. Good. Thank you. The pass mark is 60% and there is no limit on the number of attempts. Okay. You can keep on writing every day. Finally, you pass. But pass mark is 60%. Now, this is important. This is new. This is amendment. Mr. Kumar, this is new. This is amendment. Okay. So, any individual whose name has been removed from the data bank under sub-rule 4 because he has not passed it within 1 year can apply for restoration of his name by paying 1,000 rupees. So, fellow did not pass within 1 year. What to do? If you apply for restoration, pay 1,000 rupees. The institute will allow restoration subject to the following conditions. His name will be shown in a separate restored category. He will not be in the main data bank, but he will be kept in a restored category. That itself is a shame, but it's okay. At least his name will be there. So he can give a declaration to companies which is already a director that his name is there in the data bank. Not in the main, but in restored. No, his name will be shown in the restored category for a period of 1 year from the date of restoration. Now he will have to pass this online proficiency self-assessment test within that 1 year at least. Okay. His name shall be included in the main data bank only if he passes that online proficiency test. Okay. Friends, this was introduced recently in 2022. Okay. So kindly remember this. 23 exam, 6 months rule will apply. 6 months rule. So any provision which was made applicable before 30th September or before. So October, November, December, January, February, March, April, May, 8 months. So even up to November, December, you can do. Just count 6 months. From the date of your exam, go back 6 months. Any provision which was amended within 6 months, they cannot test you. But this will definitely come for May 23. It may not come. This is applicable to May 23. So they could give you a problem on this test to test. So-and-so could not pass, advise him or what to do. He can make an application for restoration for 1,000, pass. Okay. Now, at the time of initial registration, you would have paid money now for 1 year or 3 years. If he once passes in the restored category, the original registration fee will continue. He need not pay additional fees, new fees, fresh fee and all. Whatever he paid at that time will continue. Okay. If in case he fails to pass the online proficiency test within 1 year from the date of restoration, pathetic creature. Okay, he is not able to pass even within that extra 1 year. This fellow's name shall be removed from the data bank. And if at all he wants to be, you have to apply fresh. Again, you have to go back. Okay, like as in snakes and ladders. Again, you have to make an application under 1. Got it? I mean, seriously pathetic on this fellow. My God. Okay. Now, for your information, sub-rule 1 has been introduced by this company's amendment, Second Amendment Act, Haryana. Thank you. That's what I was thinking. Close to Gurgaon in Haryana. Thank you, Ji. All you guys from Gurgaon. Great. Okay. Now, so sub-rule 5 has been inserted by the company's appointment and qualification of Second Amendment rules 2022 with effect from 10th June 22. Okay. Correct. Krishna Kumar Agarwala is correct. There is a temptation to make a collection fees by keeping the person in restored category. Which company would like to take the exactly seriously? So I don't know. But then see, this was a loophole. There was no, see, guy's name is removed. What would have happened? In the meantime, he'll be a director of some big company. And that would be a little shameful now. So to protect these wallas. See here, you're going to see some people need not take the online proficiency test. Okay. This is a little too elaborate. I humbly suggest you read it. Basically, these guys they have been key managerial personnel or director, okay, in listed public company or unlisted company having 10 crore rupees more, a body corporate listed on any recognized stock exchange in a foreign country, body corporate, he has been a key managerial person or director in a company incorporated outside India or a statutory corporation, or he is a director or above in the Ministry of Corporate Affairs. I mean, that is divine. Jumping from the sky cannot be tested. Or the Ministry of Finance, or Ministry of Commerce, or Industry, Ministry of Heavy Industries, etc., etc. These guys, I mean, no way we're going to ask them to test. Okay, no way. Similarly, he is a CGM or above in a SEBI, or RBI, or IRDA, okay, or all big guys. Guys have retired as big shots. Okay, so no entrance exam for them, no online proficiency. Obviously, because they've been such senior people in such big places, they are expected to be aware of all these things. Okay. Provided further that for the purpose of calculating the period of 3 years, any period during which the individual was acting as a director or KMP in 2 or more companies will be counted at the same time, will be counted only once. So for 3 years, this fellow should have held this office. For not less than 3 years as on the date of inclusion of his name, this man should be holding office in any of these companies as a director or KMP, which means existing big shot directors can straight away come here. We won't make them go through this shameful online proficiency test. Straight away they come into this. Existing guys. Okay. Straight away they come here and 3 years, straight away you go. Okay, beautiful. So this whole data bank thing will not apply to Section 8 company. Okay, is exempted. Okay. Now we have come to some sort of a thing. Fantastic. Independent directors over, topic not over, I still got 5 minutes to cover, but independent directors over, I know, a little bit boring, right? But I try to, think. And this is the latest amendment. This is the latest. 4950 latest. It may not be there in your BOS material. Don't worry, it will be included before your exam. In the meantime, as a faculty, I have been instructed by the Board of Studies to give you the latest amendments as and when. So what you are now getting is coming from the Board of Studies of the Institute. Please, later on I will upload this, take it. Okay. Chalo. Good. See, once upon a time, Institute material will not be so elaborate, will not be so user-friendly as they are today. At that time, we used to struggle to get our data, collect together and study and clear the exam. Okay, nothing was given to us on a plate. Even coaching classes were not there. I'm talking about 1987. I qualified in 1987 as a member of the Institute. I was just 21 years old at that time when I qualified. I just completed 21 when I became a member of the Institute. So why I'm telling you, nothing at that time. No, even teachers were rare. We had great teachers like R. Bhupati and all. Once in a while, they'll come and they'll teach us. And they won't do they are not money-minded. They will just come and we have to obey what they say and we have to learn and go. R. Shivakumar in Chennai, I'm talking about, my city. I'm sure Mumbai had such great teachers. Delhi also had such great teachers. Kolkata, everywhere. But Chennai had these guys like our own past presidents, R. Bhupati. We had R. Shivakumar, who used to teach us. All were tough. And they used to teach, but we have to go and sit and really adapt and learn. Nothing will be given on a plate. Those were those days. Today, by the grace of God, BOS is giving you so much benefits. They are giving you so much inputs. Okay. So don't worry, everything will be there. Finally, we just see resident director and then move on so that tomorrow we'll see types of directors. Just like we said, woman director, every company shall have at least one director who stays in India for a total period of not less than 182 days during the financial year. Need not be a citizen. Need not be a citizen of India. He should stay in India for a total period of not less than 100 days. This could be on and off, intermittent. That means he can come and go, but totally 180 days, not less than 180 days during the financial year. Okay, so that is compulsory, which is why whenever a foreigner comes to me and says, Mr. Srikanth, I want you to incorporate a company for me in India. I say, I'll do anything, but I need one local director, get me. Then only I'll start. Because my country, the law says there should be a local resident director. Oh, so I should have a resident director. Yes, sir. Please go get some Muthuswamy, Kumaraswamy, come and bring him. Then only I'll start the process. And then usually they'll come with a local guy. Then that fellow will become that local employee or director of the local company will become they'll make him a director of the local company. And then I will say, I'll have one more Indian guy, yeah. Because tomorrow you fellows are not able to come from Singapore because of pandemic, corona. At least I can have a board meeting here. Okay. So, I mean, these are things that I inform my multinational clients when they come. At that time, they will be a little upset, but they will listen to me. Later on, when pandemic came, all of them were very happy. Srikanth, we are happy. Things going, everything fine. Thank you. This is exactly why I told you have one fellow here. Nothing will happen. You guys are 3 guys. You can control it anytime. Remove these fellows also because you are the shareholder. You are holding 100% of the shares. You can remove him. So, I mean, this is more of a practical point I'm making. Wherever possible, in my lectures, I will try to bring practical flavor because I've been practicing from, 87. Then I joined Pricewaterhouse. Then 3 years. Then I quit. Then started my own practice. I'm going to complete 35 years. I've already completed 35 years in practice. 22. 87, 22. Because I was holding COP right from day one. So 22, 35 years of practice. Okay, so I can maybe share some of these practical stories. Could be of relevance to you as future members of our institute. Good. So in case of a newly incorporated company, obviously, if this Chinese fellow is appointing somebody, okay, that man may not be there for the whole 182 days. Now, because if it's September, then if it's part of the year, then proportionately we have to take. If it's 182 days for 365, how much for 70? How much for 150? We have to proportion. The resident director shall be, all directors shall be individuals. Okay, obviously, because punishment way of imprisonment is there for directors. So you can't put an artificial person in prison. Therefore, directors shall be individuals. Body corporate, firm, association of person, etc. cannot be appointed as directors. Okay, with this, we have come to an end of our today's session. I hope you enjoyed it as much as I did and looking forward to meeting you all on Monday evening at 6 p.m. sharp. Okay, have a great evening or wish you all the best. Bye.